that are keeping things bid. Things have come in a little bit. This week's felt a little spa-like relative to post-Liberation Day, but there are some exceptions. Tesla still remains extremely bearish sentiment, really elevated skews, even though everything else has kind of come in with the market.
Is there anything that executives are saying that is cooling the nerves? It's really so much about the outlook at this point, given the first quarter didn't account for a lot of the tariff-related measures.
Yeah, I think investors are hanging on every word, and now you have a few companies giving these multi-scenario guidance.
Right.
And it's really interesting. It almost makes the earnings themselves almost like a binary option if you think about it. And then there's obviously the option sentiment on top of that. But in general, the feedback I've received is investors would rather have that than companies not be able to say anything at all.
Well, I'm glad you brought that up because we saw that from United. We also, in a way, saw it from the Bank of Canada as well. We have about 30 seconds left with you in this block, but you think about some of the other names taking the stage. Would you expect to see more of that sort of roadmap scenario, blueprint?
I certainly would. It makes a lot of sense. It's very reasonable. And if you think about it, if the companies from a stock perspective are getting rewarded for that post-earnings, I don't see why other management teams wouldn't consider it as well.
All right, we'll find out soon enough. Amy Wu Silverman, you are sticking with us through the opening bells. And here's the setup as we're heading in. The S&P 500 down pre-market. We're hanging out about 1.1% lower. We've been there for a while now. And it's the Sell America theme that you're seeing across asset classes right now, from the 10-year Treasury to the Bloomberg Dollar Index, all lower on the day. That means yields higher, and people really seeking safety in gold, in hard assets. Gold at a record high of about 2.7%. We'll bring you all the action on this Monday at the opening bell next. This is Open Interest.
We're micro investors. So as micro investors looking to invest capital, whether it's in private equity or in direct lending, what we're looking for are opportunities to deploy capital at attractive risk return. When we wake up in the morning, we don't seek to avoid risk. We seek to price it correctly. And so in an environment like this, for sure, if you're looking at a portfolio company opportunity, when you think of the value creation plan, you're factoring in now the uncertainty, which undoubtedly will impact the extent to which you're willing to pay for that asset. Now, in our existing companies, in our existing portfolio, the vast majority are services company. And services companies don't have basically the input issues. But I will say that when we look and we roll up all this data for all of our portfolio companies, and it's quite rich. It's just down now below 1 million employees globally around the world. We're 2,300 at Carlyle itself. But in our portfolio companies, we roll up this data every month. For example, the inventory component of PMI was up about 4 points. I know that's not really news that anybody probably would have focused on, but we could see that happening months ago. So immediately when it looked like the new administration was going to come in and there was the possibility of tariffs, you could see purchasing managers immediately mobilizing to start bringing goods in faster because of the uncertainty factor.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Bringing you the latest latest news in private markets whenever and wherever it happens. I'm Kriti Gupta in the south of France, and this is Bloomberg.
All right, we are moments away from the start of trading. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld. Of course, we're coming off of weekly losses, down about 1.5% last week on the S&P 500. And then there's a lot of nervousness in this market. You think about the uncertainty over trade, what's going to happen with tariffs. You think about the uncertainty over Jerome Powell's future as the head of the Federal Reserve. And you think about the uncertainty over the corporate earnings picture, of course, with analysts revising downwards their earnings expectations. There's a lot of volatility in this market, but the bells are ringing nonetheless. You can see the clapping over at the New York Stock Exchange, over at the NASDAQ. There's not too much to cheer if we take a look at the early trading, though, at the start of this fresh new week. The S&P 500 hopefully will show it. It's down about 1% right now in the cash trading. And then you take a look at what is actually dragging these indexes down. It's Tesla, front and center. Under pressure, of course, after analyst Dan Ives warned investors that it faces a, quote, code red moment if Elon Musk doesn't pivot his attention away from Doge, down about almost 5% right now, Sonali, down almost 40% or so since the inauguration.
And Katie, I'm also taking a look at Capital One higher after receiving approval from U.S. regulators to buy Discover in a deal to create the nation's biggest credit card issuer by loan volume. And we are back now with RBC Capital Markets head of derivative strategy, Amy Wu Silverman. It's interesting, a little bit of green under what is really a bigger sea of red today. A lot of uncertainty as we've been discussing. We've been talking about earnings season, but what about the White House? Ultimately, what they say is what's driving the picture. We've been talking about bond yields. We've been talking a lot about the uncertainty around Trump's relationship to Powell and whether he actually is able to fire the Fed chair. What does that mean for broader risk assets?
Look, I'm going to tell my first bad vol joke of the day, but, you know, everyone's heard of theta, but there's another Greek we should think about, which is tweta, which is just the idea that at any point in time you get this idiosyncratic risk from the White House, it brings correlations up no matter where we are in earnings season, earnings season. And the issue is, you know, all this to me funnels to the risk-free rate and to the volatility regime we're in. So, you know, we were talking at break about just the resting heart rate of the VIX being higher. That's not healthy for the patient. You know, a 30 handle on the VIX that we just get used to doesn't mean that it is good that we feel these swings kind of viscerally intraday.
Yeah, absolutely. It feels like you could also call it the neutral rate of the VIX wherever it stands right now. It's certainly seems higher than it was before. I do want to ask if you're seeing any of that getting priced in. You think about people grabbing extreme tail risk hedges, hedging for a potential black swan. Are you seeing any of that in your world?
We absolutely are, and we kind of track it through multiple. You can look at the volatility of the VIX. You can look at SDEX or TDX, which measures the 1 in 3 standard deviation drawdowns that cost in the market. They've all climbed to year-to-date highs. What we really want to know is how does this look on a historical basis when you bake in COVID, when you bake in the global financial crisis? They still look reasonable. If you start to see those tick up, you know, that's a big question mark because we already know that a lot of these kind of safe havens, Mag 7 for instance, or the US dollar are no longer these safe havens. And so when you really start see these tick up as well, that's very alarming.
And you think about these hedging products, particularly at a time when you think about how much the equity market has drawn down. It has been significant, but we haven't hit those alarming levels. A lot of people talking about that very scary level of the 200-week moving average, which you haven't really seen unless we've hit a crisis. Now, when you look at the market today, are you concerned that investors aren't pricing in a recession or a deeper recession?
Yes, and I'll tell you what I think is also related to that. So Lori Caversino, our chief equity strategist, she likes to call these the tiers of fear, right? So we're kind of floating in that tier 2 right now. The issue is nobody grinds down from a tier 2 of fear to a tier 3 of fear. It's always a gap down. And you kind of saw that post-Liberation Day when people kind of have to acclimate to a new reality. It always happens in this big gap down, so volatility gets repriced very quickly. So the concern's not only that people start to bake that in more than it is already baked in, it's the velocity at which it happens is not going to be a smooth ride.
I'm also curious how you're taking a look at cross asset volatility right now? Because it seemed like everything was moving in lockstep after you got the Liberation Day announcement, then you got the 90-day pause. You saw a sigh of relief across investment-grade credit, across treasury yields, across stocks right now. But do you think that that is going to continue? Do you think that this will be a concerted move up and down when it comes to these different asset classes? Are we going to see them move out of lockstep at some point?
So if you kind of take Liberation Day as kind of the day one, right? It was actually interesting because there was a delayed reaction. Equity vol reacted first at day two, and then day three was basically credit, then rates. So I have to give our market a little bit of credit. We were a little bit earlier on this. And still, if you look at, say, MOVE versus VIX right now, it's still VIX that's kind of carrying the signal, I think, because especially during earnings season, you get that idiosyncratic information from the management teams first. If we start to see more triggers from both the credit side and the rate side, that would also make me nervous because typically that's more tier 3 risk, not tier 2 risk.
You know, speaking of diversification in any form or fashion, I want to pull up actually what you're seeing in the S&P 500 right now. Because if you look at all the sectors, you're not seeing a single one in the green. Now, for much of the world, it is a holiday, but at that same rate, you are not seeing a lot of love in even sectors that have traditionally been havens. And I'm wondering whether you see some of those traditional safe havens no longer working as safe havens at some point this year.
Yeah, you know, it's been interesting because obviously gold has been where folks have kind of flocked to safety, and it becomes almost an existential question, Sonali, because you think about the risk-free rate, right? And that is baked into everything when you think about portfolio construction. So again, if that resting heart rate is higher, if we're even questioning that underlying sort of treasuries or Mag 7, which there was a time when Mag 7 was your flight to safety, there aren't that many places to go, and the issue is there is a crowding effect when all people can think about is either gold or perhaps using kind of S&P options as hedges. You're going to see far more activity. Those tails will start to pick up.
Yeah, it's really interesting. I'm glad you used the word existential because that's what it feels like. You think about how bonds have performed. You think about how the dollar has performed. You certainly haven't found any safety there. I am wondering who is the marginal buyer in this market, because I watch the ETF flows pretty closely. You see a big bid coming in through those index tracking products in ETF land. And a lot of people say that really retail is driving the ship here. But I'm curious whether you're seeing any other sort of buying the dip, catching the knife action going on in other classes of buyers.
No.
There you go.
And it's interesting because especially even within retail, you have kind of retail, maybe your Reddit, GameStop crew, but then you have sort of high net worth retail, and even that cohort is drawing back. The question to me is if you lose that incremental other pocket of retail that's been relatively resilient, who's been trained to buy the dip, where is the incremental buyer? But, you know, there's been 5 years of folks being trained to buy that dip, so I wouldn't count it out yet, and I'd be watching those call wings in the past to see if anyone is stepping in the options market.
A good reminder, too, that retail is a broad church. It's not just your message board traders. It's also mom and pop and some of those high net worth folks as well. Amy Wu Silverman of RBC. Meanwhile, let's take a look under this hood. We're about 7-8 minutes into the session. We're going to do that with Bloomberg's Isabel Lee. Isabel, what are you watching?
We're looking at TSMC. It's edging lower by 1.3%. So that's after the company's Arizona subsidiary posted a loss. The company also listed the challenges of ensuring export control compliance by its customers. So this comes months after the company's AI silicon was found to have flowed to Huawei via intermediaries. So again, this highlights the US-China trade war. But overall, the world's largest contract chip maker kept a bullish outlook for 2025. And up next, we're looking at some green. We have Netflix edging higher by around 2%. So the streaming giant reported record profit to start the year. They really have allayed concerns of any slowdown that the economic uncertainty may bring. So first quarter earnings rose 25%. That beats estimates. Sales also came in line with expectations. So investors have come to see Netflix as a safe play. That comes amid the movie and the TV challenges the industry is facing. And of course, even amid all this uncertainty. I mean, with a global audience of more than 700 million viewers, they're probably in a good spot. And last is MicroStrategy. It's edging higher by 2.3%. We have CTBC initiating the coverage of Michael Saylor's firm, and they recommended a buy. So this stock is either a love it or hate it kind of stock, and they're really aggressively buying Bitcoin. Just last week, they bought, again, $6,000 Bitcoin, worth $36.4 billion.
Isabel, we thank you so much for keeping an eye on things. That is Bloomberg's Isabel Lee. Now, coming up, more volatility for Hertz after getting a boost from Pershing Square's new stake in the company. More on the auto sector next. This is Bloomberg Open Interest.
You missed it on Balance of Power.
Governor, I wonder if there's a silver lining in any of this for the great industrial towns of your state from the last century. Syracuse, Rochester. Based on what we're hearing from this administration, they will again have a seat at the manufacturing table. Do you believe that?
I hope so, but we have advanced manufacturing, we have pharmaceuticals. In fact, I was able to lure Micron with a $100 billion investment, the largest in our nation's history, to build semiconductors in the Syracuse area, and they'll be affected by this. The component parts to what they're building in the supply chain, they're going to see an increased cost, not just because they're in New York, but because they're in America. And that's what worries me. There could be a silver lining, as you say. I don't know how old I'm going to be when that happens. I mean, what are they going to do? Start building factories now? And, you know, I just don't know. All I know is that people were promised lower prices on Inauguration Day. And guess what? They're going up.
Don't miss Balance of Power live every weekday. Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next?
On this episode, the continent has been silent, and people are always looking for new. And new means us bringing our stories to the world, told in a way and manner that is just going to wow you.
Premieres April 25th, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In case you missed it on the opening trade.
Is Trump, as he says he is, ready to do transformational trade deals as long as he gets his interests taken care of? Because if he is, that gives a huge opportunity for the UK to really move the dial on its growth with the US. So I can't imagine that you would shy away from that prospect if it's genuine. What remains to be seen, is it genuine on the part of the US? And we have to test that.
Don't miss the opening trade, live every weekday.
Welcome back to Open Interest. You can see that Sell America trade gaining steam right now. The S&P 500 down about 1.3%. Losses accelerating after markets opening. You can see that also that sell-off picking up steam in the bond market with the 10-year Treasury yield higher by about 5 basis points right now. We were above 440 a little bit earlier today. And the dollar also getting caught up in the sell-off, down about 0.8%. Meanwhile, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Spotify getting raised to a buy over at Wolfe Research. The analyst says it has many paths to improving monetization and notes that the industry is undervalued. Next up, Salesforce getting downgraded to a sell over at D.A. Davidson. The analyst says that this company is neglecting its core business to pursue a premature AI opportunities. Shares down about 2.7%. And finally, Norwegian Cruise Lines getting upgraded to a buy over at CFRA. The analyst cites strong demand and says that cruise efficiencies offset macroeconomic headwinds, Shanali.
Hertz remains volatile after Bill Ackman's Pershing Square amassed a nearly 20% stake in the company, betting that tariffs will boost used car prices. Bloomberg's Detroit bureau chief, David Welch, joins us to discuss. Now, there was the news itself, and then there's a couple days, and then there was Bill Ackman's missive as to why he invested in Hertz, his long-term future for it, and the potential partnership that they can maybe ink one day without a whole lot of details with Uber. When you looked at his release about why he invested, what did you make of it?
First thing I thought is, look, he sees a company that's not performing well right now, has all kinds of problems, and is very, very cheap. The stock, before he got in, was trading, I think, as low as $3.30 a share. The bonds are also cheap, too. I mean, just everything about Hertz is trading like it's headed toward bankruptcy. So if there's any kind of improvement here, then his bet will pay off. He's his own catalyst, clearly, because once he was in the stock and that was announced, others started buying in. One can imagine that as Hertz maybe refinances some of its debt or restructures its balance sheet, and if they do see some improvement through used car pricing, for example, then there's nothing in Ackman's view but upside here, because the company is not really, I think, in danger of running out of cash at the moment, but it does have a lot of work to do, and I think he sees nothing but upside given where the company is now. It's basically a buy low opportunity for him.
A buy low opportunity. I am curious what the reception from management has been like. Obviously, Bill Ackman taking a nearly 20% in your company could be perceived as bad news by some, but what are we actually hearing from Hertz executives?
So CEO Gil West put out a memo on Friday to the staff basically saying, look, Bill Ackman's interested because he's recognizing our work and the potential that the company has going forward. So Hertz is pretty happy with this. They see it as an endorsement for the kind of operational changes they're trying to make and the turnaround effort that they're trying to pull off.
David, when you think about also this week what we might see from Tesla in particular, how are you thinking about how the entire auto industry is digesting the news of tariffs, particularly given Tesla's a bit of a unique story here with Musk's closeness to the president?
Yeah, look, all the car companies are still wrestling with what's going to happen with tariffs. There was talk from the Trump administration, from Trump himself actually, that we would get relief on the parts tariffs in probably Canada and Mexico, which would be great for the Detroit 3, but would really help everybody. But we haven't seen official details, and we haven't seen all of that put in place yet. So they're all trying to wrestle with this. Tesla is actually least afflicted by this because they get, I think, only 15% of their parts from outside the U.S. It still affects them, just not to the degree that it does the Detroit 3 and the foreign companies that are importing vehicles into the U.S. market. But as we've seen some analysts say, downgrading the stock, his proximity to the president has caused a political backlash among some buyers. And I've seen research that most EV buyers are, let's say, left of center and further leftward. So if they don't like Trump's proximity to the president, they don't like his if they don't like, Musk's politics, then you've seen some people demur from buying the cars. You've seen some more vehicles show up in the used market. So some buyers or owners are selling them. So investors are worried about that impact, and they also want to see Musk kind of give up the Doge job and go back to running Tesla full time, because sales have been down. They want updates on the self-driving vehicle and some of the AI things that Elon has talked about. They just sort of feel like they want the guy who founded and built the company back at the wheel.
All right, David Welch, great to speak with you ahead of Tesla's big day, of course. A lot of key man risk in that stock when it comes to Elon Musk. A lot of investors want him back at the helm. Meanwhile, we do want to pivot here and take a look at these markets. The S&P 500 hitting a session low, down about 1.4%. Here's a potential reason why. You have President Donald Trump posting on Truth Social that preemptive cuts in interest rates are being called for by many within the White House, that is. You also have him posting that Powell has always been too late, except when it came to the election period, when he lowered in order to help sleepy Joe Biden, later Kamala, get elected. How did that work out? These are the president's words. Again, again. So really ratcheting up pressure on Jerome Powell.
Ratcheting up pressure and also kind of shifting blame of any potential slowing of the economy to these high interest rates. He said that there could be a slowing of the economy, and Lester, now he's got a new nickname for him, Mr. Too Late. A major loser, he says, lowers interest rates now. So, of course, watching closely the dynamic between the two as he considers ways to fire the Fed chief.
I like how you phrase that, shifting blame, because that's what it feels like. He also offered some rationale for perhaps why the Federal Reserve would want to cut rates. There's a lot of questions about inflation, but the president posts that energy costs are way down. You have food prices, including Biden's egg disaster, his words, substantially lower, and most other things trending down. There's virtually no inflation. So that debate developing in real time. We'll continue to keep up with that. And coming up, we'll also talk about the $35 billion deal between Capital One and Discover getting the green light from regulators. We'll take a closer look next. This is Open Interest.
Season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome back to Open Interest. A check on stocks right now with the S&P 500 near session lows, down about 1.4%. You can see the pain is being led by big tech once again, with the NASDAQ 100 down about 1.6%. Some volatility coming back into this market as measured by the VIX. Let's take a look at the individual stock level to my left here. NVIDIA, Apple, Tesla, all lower today. Netflix seeing a little bit of green. Of course, they had a pretty good earnings report last week that is boosting the stock today. And I want to end on some deal news, Shanali. You can see that Capital One and Discover finally getting the blessing for their deal. Both stocks higher right now in Monday's trade.
Exactly. Capital One and Discover higher on that expected merger, expected to close in May, very soon. Bloomberg's Paige Smith has been reporting on the deal, joins us here on set. So what next? We finally have a whole lot of clarity from these companies, and it's, one that didn't go without its challenges in the approval process, at least from lawmakers. What do they become, and how do they shake off any concerns about how consumers might be treated under this new regime?
As you said, this is a long time coming. This deal was announced, just to put it in perspective, more than a year ago. It's a massive deal. It was $35 billion when it was first announced in February. a year ago from February, and they were just awaiting this final approval from the Fed and the OCC, and there was a little bit of question, frankly, of whether the Justice Department would challenge the deal and sue, and that has been made clear as well. So as of now, it's sort of full steam ahead. And as you said, Shonali, it's a big deal for these two massive payments companies.
Right.
Capital One is a huge consumer lender. Discover is a very well-known brand as well. So it'll be a big deal moving forward.
Well, give us context on what this means for the landscape overall. Like you said, this is a massive deal, $35 billion when it was announced. I would imagine this creates a behemoth. How does this reshape the competitive landscape?
It is. It would create the largest credit card issuer by loan volume in the United States, to put it in perspective. But it also is interesting because it really gives Capital One, theoretically, if all of the synergies and everything goes to plan, a competitive advantage in the sense that Discover is interesting because it's a credit card network. It's sort of like a Visa or a MasterCard. So now that Capital One would have such a network of its own, it essentially could give Capital One the opportunity to save itself a lot of money and create a lot of synergies, but also essentially create this behemoth where it doesn't need to rely on a Visa or MasterCard as heavily.
This comes at a time where you're seeing the CFPB be extremely defanged. Is that fair to say?
Certainly.
And you're covering that very closely. When investors look at this combined company, do they think that part of the investment case is, wait a minute, they're not going to get sued as much by regulators in the future? Credit cards were a huge part of the story when we think about the last couple of years in terms of financial suits.
I would say I think it's still early to tell. I don't have a crystal ball, nor do I think a lot of folks at this moment in time. But I would say that it is definitely fair to say that the CFPB, a large role that agency played has been pulled back under the Trump administration. Where that agency actually shakes out to be in its final form, we'll have to wait and see. There were some priorities that were published last week by the Trump administration that we reported on that gave investors a bit more clarity of where the agency would be focusing on things like veterans issues, for example, less so on credit card companies.
All right, Paige, really appreciate your reporting. Sure, we'll be speaking to you again soon. That is Bloomberg's Paige Smith. Now, let's take a look ahead at what to expect this week. The IMF World Bank spring meetings begin today in Washington, and tomorrow the IMF is set to lower its growth outlook in its new projections. Also, more than 120 companies report earnings this week, including heavyweights, including Tesla, Alphabet, and Boeing. And to round it all out, we'll get PMI, new home sales, and the Fed Beige Book. Shonali, it will certainly be busy.
And coming up in the next hour, Katie, more on Powell under pressure with Van Rand's Shanna Sissel and former Fed economist Claudia Saum, plus the outlook for IPOs with the CEO of General Catalyst. This is Bloomberg Open Interest.
Are you worried about your borders because of what's going on in Russia and Ukraine? Is that something you worry about in terms of the impact of Russia, Ukraine on your investment appetite for things like that?
I'm not worried about Russia, invading Norway anytime soon. We are a member of NATO. We do border to Russia, but now, since Finland and Sweden joined NATO, we feel stronger than before.
So today, what would you say your biggest investment concerns are? You're running $1.7 trillion fund. For the average person to not manage that much money, what should they be worrying about, and what are you worrying about?
No, I think you've got two things. One, you have the known unknowns, right? So, and there at the top of my list would be two things. One is inflation, because I think there is an argument in a tight labor market when you potentially decline the supply or reduce the supply of labor. In the US, you put on tariffs. These things can be inflationary, and there could be a moment where, given the high level of government debt, that the investors suddenly decide, you know what, we want a much higher coupon to lend to, to governments. And so you could see a step up in interest rates, which could be negative for financial markets. Then, of course, all the AI-related stocks, the epicenter here is Taiwan, so you need to watch that. The thing that really scares us when it happens is the unexpected,
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Praise for the Pope after the Vatican announced today 88-year-old Francis had died in his apartment at the Vatican. New York Cardinal Timothy Dolan.
His simplicity, in his humility, in his easygoingness. Boy, these were gifts that he stewarded so well.
I'm Vicki Barker at the Foreign Desk in London. Vatican journalist Susie Hodges says Pope Francis brought the common touch to his elevated position.
He did so many things that other popes didn't do, like pick up the phone and ring somebody who'd been suffering. These were unprecedented things for a pope to do.
At his own request, Francis will lie in a simple wooden coffin, not on an elevated platform, but at the same level as the people he vowed to serve. The Pope clashed with traditionalists as he tried to reshape the church into a more inclusive institution. He told CBS News,
We are all fundamentally good. Yes, there are some rogues and sinners, but the heart itself is good.
He reached out to LGBTQ Catholics and apologized to the Indigenous people of Canada for the church's role in running residential boarding schools where many children were abused and died. A public prayer for Pope Francis is scheduled for 1:30 Eastern Time in St. Peter's Square. New chapter in Signalgate. Defense Secretary Hegseth avoided responding directly today on new information about a second set of messages he sent on his encrypted Signal account, this time to his wife, his brother, and attorney about an attack on Yemen.
We're changing the Defense Department, putting the Pentagon back in the hands of warfighters, and anonymous smears from disgruntled former employees on old news doesn't matter.
Hegseth was on his way to the White House Easter egg roll. His spokeswoman says the president has absolute confidence in Hegseth. The Supreme Court issued a rare weekend ruling by a 7-2 vote. It temporarily blocked the deportation of some Venezuelans being held in Texas. Correspondent Scott McFarland.
For now, the High Court has halted more of these Alien Enemies Act deportations, but it's unclear how long that halt's going to last. But it is clear the Trump administration is welcoming this fight.
New survey shows 64% of Americans won't be traveling this summer because the cost of everything seems to have gotten more expensive. Bankrate's Ted Rossman has some tips.
Be willing to take an early flight or a late flight or a connecting flight, or maybe even drive to your destination
destination. It's that kind of flexibility that can pay off. And use those rewards points and miles. A lot of people are sitting on real value that they've forgotten about.
Dow down 559, almost 1.5%. This is CBS News. A cat cafe in Florida is closing and switching gears.
For 5 years, Jacksonville Beach's Caffeinated Cat has been the place to go for anybody who needs coffee and a feline fix. Now the coffee is disappearing, although the fix remains, so to speak. The owners say after 5 years, they'll be fixing cats as a spay, neuter, and wellness clinic. In a social media post, they say that's been their goal for a while. They've actually been doing that kind of work since the start, but now it becomes full-time. They say their clinic's cat playroom will stay open for people to meet adoptable cats. Peter King, CBS News, Orlando.
President Trump once again attacking Fed Chair Jerome Powell over his refusal to lower interest rates. In a new post on Truth Social, Mr. Trump calls him a major loser and Mr. Too Late. Last week, Powell warned of a slowing economy from new Trump tariffs. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are also on YouTube. Check out the video there. Go to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. Coming up, we're going to check in with Tom Orlick, Bloomberg Economics chief economist, get his thoughts on President Trump and maybe some of the pressure he is exerting on the Federal Reserve and the Federal Reserve Chairman. What does it mean for the Fed and its independence? Ross Matheson, Bloomberg News Director for Europe, the Middle East, and Africa on the death of Pope Francis. We'll get the latest reporting there. Phil Orlando, Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes. He's going to join us and give us his thoughts on these markets. Markets are selling off. Alex Steele is back, thank goodness.
Who are you guys again?
Yes, exactly. So Alex is back. We'll have a good, strong 2 hours coming up here, focusing on the markets and the news of the day. Let's kick it off with Lisa Mateo, any Bloomberg Business Flash. Lisa.
You got it. This Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. All right, we've got stocks lower. This as President Trump reiterates his calls for Fed Chair Jay Powell to lower interest rates. Right now, the Nasdaq off about 2.5%, nearly 2.5%, 401 points. The S&P 500 off more than 1.5%, 100 points in the Dow off more than 1.5%, 664 points. The 2-year yield 3.74%, down 5 basis points. The yield on the 10-year 4.36%, and that's up about 3 basis points. Gold rising to a record. We have COMEX gold at $3,437 an ounce. That's up more than 3%. The dollar sliding to its lowest level since December 2023. Right now it's down about 0.8%. Shares of Tesla, they're falling. They're off more than 7% right now. It comes ahead of its earnings tomorrow. All also after Wedbush securities analyst Dan Ives said the company faces a, quote, code red moment. Now, Tesla leading the losses of Mag 7 stocks, which are also lower. NVIDIA off about 4.5%. We have Google down more than 2.5%. Amazon down more than 3.5%. Same for Meta. Microsoft off nearly 2%. And Apple off about 2.5%. Shares of Capital One Financial, that's what's on the rise. It's up about 0.3%. Bank regulators approved that $35 billion acquisition of rival Discover. That was late Friday. Discover shares also rising up about 2.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Alex.
Thanks so much, guys. It's good to see you. Paul Sweeney and Alex Steele here. Thank you so much, Lisa. This is Bloomberg Intelligence Radio. We bring you all the top news. What I'm really excited about, guys, what I definitely had to come back for was earnings this week. I think you get like 24% of S&P companies are going to be reporting this week from a wide variety. CapEx, what they're doing with CapEx, I'm really excited to see about.
And guidance. How many companies will give guidance versus won't give guidance? I'd be interested to see that. Or how they give scenario analysis like we got from United.
Apparently, 27% of S&P 500 companies have already cut or withdrawn guidance over the past month. This is according to Citi, so that will be quite interesting. All right, let's take a look at some of the stocks on the move today. We're joined now by Bloomberg's Isabel Lee. Isabel, you're looking at TSMC.
Yes, we have shares edging slightly lower. That's after the company's Arizona subsidiary posted a loss. So the company also listed the challenges of ensuring, quote, expert control compliance by its customers. So this comes months after the company's AI silicon was found to have flowed to Huawei via intermediaries. So again, it highlights the U.S.-China trade war. But overall, we have TSMC keeping a bullish outlook for 2025, so that's interesting.
It is interesting. Also, like ... Maybe like is there an asterisk? Like, because who actually can know, Paul?
I don't know. I mean, I'm just not sure whether you mentioned the CapEx spending. We'll see where that shakes out this quarter. How about Netflix?
Netflix, this is a different story. We have the stock edging by 1.5% higher. So if the streaming giant reporting record profit to start the year, this really just allays any concerns of an economic slowdown amidst all of this uncertainty that the tariff is bringing. We have first quarter earnings rising 25%, so that's beating analyst estimates. Sales grew in line with projections. So investors have come to see Netflix as this safe bet, even as conventional movie and TV businesses really struggle. And even amid, again, this uncertain economic environment. I mean, it does have a global audience of 700 million people, so not a lot. It's a lot, actually. That was a sarcastic tone. But, you know, we still don't see any impact from the tariff, according to them. And remember, they said that they have this $1 trillion market cap goal by 2030.
I mean, does it feel like Netflix is pretty recession-proof at that point? Like, is it discretionary anymore? I don't know.
I don't think so. I think it's, I mean, we found out back, over the last 50, 60 years, paying your cable television was often the first bill people paid before their gas and electric and all that kind of stuff. So entertainment.
Well, also, to be fair, it takes a while for them to turn that off, right?
Yes.
So maybe that's also why, too. All right, wrapping it up here with MicroStrategy.
It's strategy these days, so it's also edging higher. I still find it quite hard to remember, but yes, it's just strategy. We have CTBC Securities initiating coverage of the firm, and they rated it a buy. So the price target they set is $420, which is around a 30% increase from the last price. So this is a highly controversial stock. I feel like you're either bearish or you're uber bullish. The company has been hoarding Bitcoin since 2020, and again last week they bought 6,000 Bitcoin, raising its total holdings to $36.4 billion. And Michael Saylor really just is doubling down on this Bitcoin bet.
All right, Isabel Lee, thank you so much. We appreciate that. Isabel Lee, cross-asset reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Brokers studio. Some pressure, it seems to be building on Fed Chairman Jay Powell from the White House. President Trump out on social media this morning, urging the Fed to lower interest rates and challenging Fed Chairman Jay Powell personally, on a personal level as well, it seems like. Tom Orlick, Bloomberg Economics chief economist. Hey, Tom, how concerned should the marketplace be about President Trump and the political pressure he is applying to the Fed and to the Fed chairman?
Well, I think there's a couple of reasons to be concerned about it, Paul. The first reason is that we have central bank independence for a reason, right? The experience from the 1960s, the 1970s, when monetary policy was dominated by the concerns of the executive branch, was that, well, that was a big contributing factor to inflation running much too high for much too long. So if you're in the bond market, if you're in the FX market, if you're in the equity market, that's clearly a big source of concern. The second, of course, is the signs that we're seeing from the administration. And I think we can think about that on two lines. The first is legal moves that you probably wouldn't pay too much attention to if you weren't an expert, but legal moves which chip away at the basis for Fed independence, asserting a presidential right to fire the heads of other independent agencies. And legal scholars say, well, what's really going on there is that the Trump administration are laying the groundwork for a potential move against Chair Powell. And of course, we don't need to go further than Trump's Truth Social account to see the president's animus, right? A clear view that the Fed is taking the wrong path, and Powell's, to quote Trump, Trump's termination can't come soon enough.
Okay, so to that point, let's just game theory this out for a second. What would happen if the Fed cut rates?
So I think the concern is that inflation is still considerably above the Fed's 2% target. So if the Fed moved to cut interest rates at this point, I think the markets might reasonably conclude that it was doing so on the basis of political pressure rather than economic logic. And that will be a step to chipping away at the Fed's credibility as an inflation fighter. And it's that hard-won credibility stretching back from Volcker through Greenspan, through Bernanke, through Yellen, and now with Powell, which is key to keeping inflation expectations under control.
Tom, so what's your concern here, I guess, about the dollar here? We've seen just pronounced selling of the dollar. We're down about, the Bloomberg Dollar Index is down about 8% from its recent highs. What does that tell you?
So it's interesting, Paul. The economic textbooks tell us when a country imposes tariffs, its currency should appreciate. But here we have the US imposing sweeping tariffs against all of its major trade partners, and its currency is depreciating. So what's going on? Well, I think there's a few potential contributing factors. The first is that, well, the president himself has told us that he favors a weaker dollar to support competitiveness. Don't fight the Fed on interest rates, maybe don't fight the president on the exchange rate. The second is that by imposing all of these tariffs, the US is effectively saying it's going to play a smaller part in the global trade system going forward. And if the US is going to play a smaller part in the global trade system, well, maybe other countries, companies in other countries don't need to hold so many dollars. And then the third, and perhaps this is the most troubling, is, well, confidence in a currency is underpinned in sort of fundamental way by confidence in its growth prospects and confidence in its institutions. We really can't draw too many conclusions from just a few weeks of dollar decline, but certainly the contrast between what the textbooks say, tariffs mean a higher dollar, and what's actually happening, tariffs combined with a weaker dollar, do suggest that perhaps the markets are starting to have a little bit of concern about US longer-term growth prospects and potentially about US institutions.
So, Tom, to that point, when we talked about what happens if Powell does cut rates, I mean, that's a very emerging markety thing to kind of do, right? Then you have high inflation. Can you grow your way out of it? You mentioned the dollar and the question marks around the dollar not following rates higher, for example. You worked in Beijing for many, 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 many years. Is it fair to say that the U.S. is trading like an emerging market?
So I think that's I mean, I certainly appreciate the analogy, Alex, and I think some of the dynamics are sort of pointing in a kind of similar direction. But I think we need to think about magnitudes as well, right? And we also need to think about the credibility that the US has built up over not just years but decades, right? So do some of the dynamics here have a kind of echo of things that we've seen in emerging markets over the years? Yes. Are we in the type of extreme situation in the United States that we've seen in, for example, Turkey in recent years? No, we're still quite some considerable distance from that extremity.
All right, Tom, thanks so much. Always appreciate getting a few minutes of your time. Tom Orlik, he's a chief economist for Bloomberg Economics. He is based down there in Washington, D.C., trying to get a sense of kind of where we go from an economic perspective here. We had a guest on earlier this morning, Drew Mattis from Metropolitan Life. His recession call is now at 60%. And he started the year at 30%, but it's tied directly to the tariffs and kind of where the policy goes on the tariffs. But all we know is a dollar. Bloomberg Dollar Index off another 0.8% here today. So another move downward in the U.S. dollar. More coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red on the screen after the extended holiday weekend. The NASDAQ leading the losses down more than 2.5%, 418 points. We have the S&P 500 down 2%, 110 points, and we have the Dow down nearly 2%, 745 points. The two-year yield, 3.73%. That's down 6 basis points. The yield on the 10-year, 4.35%. That's up 2 basis points. To commodities, we have COMEX gold up more than 3%, $3,439 an ounce. And over to the Bloomberg Dollar Spot Index, down about 0.8%. I want to check back in with a few stocks that were moving before the holiday and still moving right now. Some in different directions. For example, Hertz, if you remember, had this huge rally last week following news of Pershing Square taking a big stake in the company. Well, now we have its shares falling. They're down nearly 12%. Netflix still trying to ride that wave from last week after its results forecast revenue for the second quarter that beat estimates. Its shares up about 0.5%. And in other news, Jeff Bezos, he sold his mansion in Seattle for $63 million, Washington State's priciest residential sale ever. He actually bought it for $37.5 million back in 2019. Not bad. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Alex.
All right, thank you so very much, Lisa. Alex Steele here alongside Paul Sweeney. This is a Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. And we are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Go ahead and check us out on YouTube as well. Well, the news overnight, of course, is Pope Francis, who encouraged Catholics to embrace a more compassionate view on many issues, died. He was 88. He passed away at 7:35 a.m. Monday in Rome, and the Vatican said in a statement he'd been sick for quite a while. Roz Matheson is Bloomberg News Director for Europe, Middle East, and Africa, and she joins us now. Roz, what are the next steps now?
Well, there are a lot of steps because this is a very big moment, obviously, for the Catholic Church and its millions of followers around the world. It's many millions of followers even around the world. And so there's a lot of procedure that happens. There'll obviously be moves towards a funeral for the Pope, but all eyes will be turning, no doubt, quite quickly to what next in terms of the process to find a new pope, because that process is complicated, steeped in history, culture, religion. It can take weeks, months, and in one case, even in the 1200s, it took years to get there. And it's a very, very detailed process of electing, essentially, a new pope, where a group of cardinals will get locked away, essentially. They can't use their phones or anything. And they meet every day to try and whittle down the list of candidates until we get that famed white smoke that emerges from the Vatican. So really, you can expect a lot of introspection about the life of the Pope. I mean, he was certainly a voice for the poor, for developing countries, spoke up on politics increasingly in his later years and his legacy, but quickly also, will his legacy be preserved? Will we see that more socially liberal agenda remain in the Catholic Church, or will we see a swing back to a more conservative one?
And that's kind of probably, I think, one of the main questions that folks are asking is, where is the Catholic Church right now? Where's the Holy See in terms of their just general views of the world? Is there an expectation that this conclave will produce a conservative or a liberal pope?
Well, that's going to be the big question. Certainly, Pope Francis, in pushing his agenda, where he spoke out quite openly for LGBTQ rights, on homosexuality, on marriage, on divorce, on the environment, even on conflicts that we're seeing around the world. And that brought him sometimes into direct conflict with leaders, including in the US, but also within the church. There were loads of people who opposed that move towards a more socially liberal agenda, who vocally did so. And his efforts also to reform parts of the church, including the Vatican finances, brought him into conflict with some more established members of the church and also the bureaucracy of the church itself. And so there will be people who'll be quite ready in this moment to try and push back against a continuity of his agenda. So it'll be interesting to see those candidates that get put forward. There are a number of potential candidates from Italy, elsewhere, even from Ghana, who follow a more socially liberal agenda, but they're equally names that are probably going to be in the mix, including the cardinal from the US, for example, Raymond Leo Burke, who'll probably push a much more conservative agenda. So it will be a very fundamental time for the church to see which side gets the upper hand in this.
Is there any geographic preference at this point? Sometimes when they're electing pope, they want to maybe back away from the Italians or the Europeans and maybe think, in this case for Pope Francis, they went to the Americas and South America. Is there any movement for go to some parts of the world that are actually growing, whether it be Africa or Asia?
you can expect that very much to be the case. I mean, it might be that after having a pope from the Americas who grew up obviously in Buenos Aires and elsewhere, to have a return to perhaps a pope from Italy or from Eastern Europe, from somewhere like Hungary, but also, as you say, to have a pope who represents a growing part of the world. So again, Ghana, Peter Turkson, who was quite a contender in 2013, but obviously unsuccessful, a name already that's going to come into the mix here, and someone who follows that more socially liberal agenda. A number of names possibly from Italy, including those who would favor the continuity process of Pope Francis, but also perhaps someone from the Philippines. The Philippines is a deeply Catholic country in Asia, a populous country, and no doubt there'll be names that come up there. Luis Tagle, of course, is one in the Philippines who would be in the mix. And so you can imagine there'll be, again, those tensions between socially liberal, more conservative, and also geographic. Mm-hmm. How do you represent where the church is growing and where the bulk of its people are?
Roz, we really appreciate this. Roz Matheson, a Bloomberg News director for Europe, the Middle East, and Africa, on what happens next after Pope Francis's death. Within the markets, taking a look at an S&P off by 2%, NASDAQ off by 2.6%. We are picking up that steam to the downside. Volume, though, pretty light. Most of Europe was closed for Easter Monday. Phil Orlando is Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes, and he joins us now. Phil, do you buy these dips?
First of all, Alex, happy Easter Monday to you. No, we remember that last week, Easter and Passover week, the markets were closed on Friday. You had a lot of market participants with their kids off from school taking, extended vacations and the like. And we had a bounce to the upside in the stock market once President Trump, I guess, backed away from the hardline tariff news and instituted sort of a 90-day cooling off period. We were expecting that as market participants, filtered back into the market this week, we could see a retest. On the equity market, that would suggest taking the market back down to that, 48.35 level we saw a couple of weeks ago. On the bond market, benchmark 10s, perhaps yields, backing up into that 4.5% neighborhood. So, again, now that you've got the players back in their seats, I think you've got to sort of let this play out and see where the support levels, technically speaking, play out, and if there's any policy news that comes out of Washington. We saw the Federal Reserve last week basically tell us that there's no Fed put. They're not in any hurry to change policy. They're going to be very patient and wait to see if there's a confluence of the solid hard data and the sloppy soft data. So that would suggest to us that we're not going to see anything out of the Fed before the June meeting at the earliest. I think we've got the luxury of time here and just, be patient and not try to chase this.
Phil, one could argue the weakness in the equity markets in the U.S. dollar is a reflection of the economic uncertainty caused in large part by the tariff discussions and the tariff news. Is there any reason to think that narrative changes in the next 6 to 12 months? Tariffs seem to be the tool of choice here for this administration.
Well, I agree with your point on the currency. Dollar euro, for example, which was, right around par or so, beginning of the year, we're sitting at what, about 115 now. So you've had a pretty significant move in a short amount of time. Treasury yields, went from 4.5%. We were down at 3.85 or so within the last month or two. Stock prices were up at all-time record highs in the middle of February. So you've had a lot of volatility in a relatively short amount of time. And all of it relates to the uncertainty on tariffs. Now, just look at the earnings season. We're only 10% of the way through the earnings season, but revenues and profits have been better than expected. Yet, when managements are going through, their assessment, the guidance has been very conservative, and some companies giving us two sets of guidance. Well, maybe we have growth, maybe we have a recession. This is what we see. So there's no visibility at all because we have no visibility in terms of what the tariff policies of the administration will be. So how can companies or investors plan not knowing what the rules of the road are?
Totally right. So when you take a look at earnings season, what would constitute a good earnings season? Like a solid first quarter and honesty about the rest of the year? Like, what do you want to see?
I mean, that's the gist of the piece that I wrote last week, that if you look at the stuff that we know, the inflation data coming down, consumer spending strong, the labor market strong, corporate earnings season, early days, of course, but strong. Yet the market is the financial markets are in a kerfuffle because the rear view mirror stuff that I just talked about almost doesn't matter because we don't know what the next month, 3 months, 6 months, 9 months, a year look like because we don't know what the policies are in place. Now, is the administration using the tariff kerfuffle, if you will, as a means of drawing trading partners to the table and negotiating better terms, in which case all of this volatility maybe sort of fades and the longer-term picture looks great? Or are we looking at these massive tariffs ad infinitum and it has a materially deleterious impact on economic growth, inflation, financial market performance? You've got two very different paths there, and we don't know which path to take.
Hey, Phil, 30 seconds left. Does Fed Chairman Jay Powell have reason to worry about his job security?
We don't think so. Fed independence, in our mind, is absolutely sacrosanct. We think the administration is going to wait until Powell's term ends in May, go in a different direction. But I think what you're doing is the Trump administration sort of playing the refs a little bit, trying to get the Fed to recognize the inflation numbers are down, based upon where the funds rate is, and the Fed does have room to cut, in our view, starting in June.
All right, Phil, thank you so much. Appreciate that. Phil Orlando, Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes, joining us there talking about the Fed. S&P 500 off 112 points. It's 2.1%. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, it looks like the stock sell-off deepening on Wall Street after President Trump warned the U.S. economy may slow if the Fed doesn't cut rates. Right now, the NASDAQ leading the losses, down more than 2%, 375 points. We have the S&P 500 down more than 1.5%, 99 points. The Dow off more than 1.5%, 693 points. The two-year yield at 3.73%. That's off 6 basis points, and the yield on the 10-year 4.34%, and that's up 1 basis point. Where is the biggest drag coming from? The 11 major industry groups, the biggest drag coming from the consumer discretionary. Then we take it to automobiles, components, automobile manufacturers. This is all in the IMAP feature of your terminal. At the top is Tesla. Its shares down 6%. That's followed by Ford down 1.5%, and GM down about 0.3%. We go to gold right now. COMEX gold $3,427 an ounce. The Bloomberg Dollar Spot Index off about 0.7%, and we have Bitcoin up nearly 4% at just over 88,000. Few companies making news. We'll start with Google. Facing off with the U.S. government today. The hearings will try and determine how the company should be penalized for operating an illegal monopoly in search. Then you have DHL. They're suspending high volume shipments to the U.S. It struggles with delays from customs clearances under those new U.S. rules. And finally, Volvo preparing to lay off as many as 800 workers at 3 U.S. sites in the coming months. That's according to Reuters. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. So I was off last week and I was doing my due diligence and catching up, and I went to the terminal and I took a look at oil prices for WTI over the last 5 days, and I was like, woo, we got real close to that 50 handle, and that is a very different story. When Mike McGlone of Bloomberg Intelligence first said he saw that, I thought he was nuts. And he's not nuts. He was very smart in that forecast. Mike, if we break below that 60, how long do we stay there for?
Well, hello, Alex. Thanks for remembering for one of the few I got right, but as a trader, I might have been stopped out and wrong initially. The key thing is I think it's less of an when and more of less of an if and more of a when, because everything's floating that way. And the key question you ask yourself right now is what stops it? So I just like to point out for the last 20 years, the low price cure in crude oil has been below 40 or below. And you look at supply-demand trends, increasing supply, decreasing demand, and now the whole world, look at every GDP estimate for the world, are facing downward estimate revisions. What stops that? Yeah, at some point we're going to get the Fed to ease. At some point we get maybe more fiscal and monetary spending stimulus, but typically you need prices to go lower in the stock market. So to me, it's just a matter of a bear market, and you're supposed to be looking for levels to sell. The question is, where is that? So I think 70 is the upper end of the range. Maybe we just reached at around 66, and I'm still looking for that cure below 40. So I'll end with one key point. Bloomberg New Energy Finance put the average price break-even cost of crude oil around $50 a barrel. And you know the rules of commodities. You usually have to get to that price or below to shut off the excesses.
How do you look at oil in the context of the U.S. dollar? It seems like investors around the world can't sell the dollar fast enough.
Yeah, I'm glad you went there, Paul. It's almost insignificant for crude oil. And on a scale 1 to 10, it's more of a 1. Supply, demand, and stock market and stuff like that are more the 10. It's much more important for gold, and you see what's happening for gold today. And secondary commodities is generally when the dollar collapses, generally pretty good for copper. And copper's actually up today too, which is kind of rare when the stock market's down as much.
Yeah, because you know what's really good? Lower input prices, like, I don't know, lower gas and oil prices. So when you're making copper, you need oil, you need gas. If that's cheaper, that actually winds up helping you. I'm curious as to when you go to the cost of production, say for oil, and say we stay there for a bit, like you said, we have to correct to that cost of production. Typically, how long do those cycles last?
Well, the last few years, it's been rather quickly, Alex. The key, I think the first one that really set it off was the global financial crisis. That was only a few months it got there. The last one was minus 40. But you see the trend there? We've had lower lows and lower highs. Then that pump to when Russia invaded Ukraine looked very akin to when Saddam Hussein invaded Kuwait. Crude oil pumped above 40 and it didn't bottom until 10 until like 1998. I think we're heading to there. Maybe that's for 40. The timing's everything, but I think the key thing that matters for all commodities is just the reversion in the U.S. stock market. That could be last a long time, and you listen to Gina Mart Adams, we can easily get to 4,000 in recession. Ooh. That means $40 crude would be normal.
Oh my goodness.
And gold up another 90 bucks here today, over $3,400 per ounce, Mike. I mean, we just keep going this way?
Well, that's one key problem with gold. It's an extended bull market. It is a bull market, so it's been a great year for gold. The reason I say that, it's up 30%. The last time it was up 30% on a one-year basis was 2007. That one didn't work out too well for 2008. It was a good indicator. And the next one, this is in the last 100 years. And the next one before that was 1934, right after the Fed, right after FDR devalued the dollar versus gold. And every other one before that was the 70s. And every time gold rallies, crude oil was up a lot. That's what's different this time. This is a significant global deflationary environment. Gold up, crude oil, most commodities down. Well, some of them are still hanging there. I'm just afraid it might just the beginning because it's basically the reciprocal of that massive money pump we had to the peak in 2022. Now it's all coming due, I think, unfortunately.
I mean, where does the gold buck stop? And I say that because, I mean, this rally has been so furious, like literally, like how long can it go until it stops at this point?
Yeah, so I look at gold right now as basically an S&P 500 put. It's really expensive on most moving averages, but that's what bull markets do. So I think that it is a very good floor just around 3,000. I think it eventually gets to 4,000. The problem is that might be a good meeting point for the S&P 500. So if you take the S&P 500 divided by ounces of gold over time, it's usually 1 to 1. Stock market just got too expensive. So if they both meet about 4,000, everything might be good. The thing is right now, it's a bull market that's a little bit stretched.
What else in commodity space, Mike, that gets your attention these days?
Well, the key thing we're all watching is to see if copper can break down, because it's been holding in there. Natural gas, I think, is heading lower, and now it's getting to be the planting season in the grains. We're just starting to drill that soybeans and not corn yet. If we don't see a drought in the U.S., I think they're all going to add to that deflationary force in commodities. We kind of need a drought because there's just too much supply in the world, and actually demand from China is so much diminishing as they adopt new seeds and growing techniques.
Is there like a farm bailout or bill or something coming soon? Like, is there something in support to help farmers if they get hit by trade issues?
There has been. It's unfortunate. We just added. The key thing is, one thing about that, Alex, is it's been the case, and almost all countries in the world support their farmers. We do. But farmers don't like getting paid to not plant or paid. And typically when you give them money, they plant more, which makes a bit of a problem. What they really need is more demand pull for their products. And the trade war is not helping. So the key thing I learned at the Bloomberg Farm Fuel and Food Conference in Indy just a few weeks ago is they need demand. And the most likely part that can come from is from biofuels. Because we can create a lot of energy from our fuels. And by the way, before the invention of the Model T, a lot of our farmland was used for transportation fuel to feed horses.
That's right. I didn't think about it. All right, so where was your farming conference?
It was in Indiana. I used to have a farm there, so it was a really good Bloomberg conference. A lot of participation, and the key thing is, it was a very Indianapolis, a very bearish sentiment, and we all realized, okay, what are we going to do for demand? And it looks like biofuels is the most significant potential thing. So, for instance, we get about 13 to 15% of our unleaded gas in this country from ethanol now. Yep. And how about adding that to soybeans? Soybeans could biofuel and sustainable aviation fuel. It's good sources.
All right. I'm sorry we missed that. Next year we're coming out. We're doing
oh my God, I would love to.
Broadcast.
I haven't been out into a farm in like almost 15 years at this point. They're the best. I did like a whole pig thing. There was a huge drought. What was it, 2013, I think it was? The whole thing there.
2012.
2012 was a big drought, right? So I went out and did that. I went to a pig farm. That was really cool.
Okay, we'll get out there. We'll do the
Glory
remote
days,
from
man.
the Mike McGlone Farm Conference. Mike McGlone, Senior Commodity Strategist, former farmer from Indiana. He's now at Bloomberg Intelligence in Miami Beach.
He gets the best assignments.
What a life arc for Mike McGlone to go to the Indiana farm to now in Miami Beach doing commodities. Sell-off continues in the market. S&P is off 2.2%. The Nasdaq's off 2.6%. So, but again, the volume's a little bit light. Europe is off today for a bank holiday over there. 10-year Treasury yields Pretty steady here, 4.34%. WTI crude oil off 2.7%, $63 per barrel. This is Bloomberg.
Listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. Check us out live on YouTube as well. So one of the headlines over the last few days is Google and the DOJ are now back to court to fight over a monopoly fix. So it's been ruled that Google is a search monopoly. Now, what do you do to fix it? Justin Teresi is Bloomberg Intelligence antitrust litigation and policy analyst, and he joins us now. Justin, I guess it's worth taking us back to like what the actual ruling was, and then what are the options to fix it?
Sure, absolutely, Alex. Thanks for having me. So last year, the ruling on search and monopoly in search is that Google basically maintained its monopoly through illegal means. So not that it created its monopoly illegally, but that it was maintaining it. These exclusivity agreements with Apple and others, so they pre-install Google search as the running search engine behind things like Siri or Safari. So every time you type something into Safari, it's going right to Google to handle that search. So basically the allegation was that it was cutting competitors out of the scale they needed for their own search engines to kind of climb up and compete against Google. So now we're having a hearing on the remedies and what to do about that particular issue.
So I must have missed this, but I mean, the court did find that Google has an illegal monopoly, right?
Right, as to search, that's right.
Wow. So what does the government want Google to do to fix this?
Yeah, so, we're really looking at the government's position here as kind of an opening salvo for a negotiation of sorts with the court, right? So they're seeking a divestiture of Chrome, which we think is unlikely to happen, and they're also seeking for Google to scale back. They were seeking for Google to scale back its investments in AI. Companies like Anthropic, as part of this whole mess too, they've since walked back that position and are only seeking Google to kind of pre-authorize investments in AI companies going forward. So we don't think any of those things are probably likely to happen, but what is likely to happen here, though, is that these exclusivity agreements I just mentioned, they're going to have to do something about that. It's tough to say, hey, these are illegal, and then not address them in a remedies phase.
So I know this might be an insanely dumb question. Who's actually hurt by Google having a search monopoly?
Sure. So the consumers, but you'd also...
But are we?
Well, that's the judge is really focused on that point, Alex. And the judge, I think, has said, look, Google's a really good product, right? And they've built this from scratch. It's homegrown. And in a but-for world, with or without these exclusivity agreements, maybe companies like Apple use Google search anyway because it is this primarily good product. But the lack of competition here, the lack of a competitor kind of scale up like Bing or DuckDuckGo, could there be this viable alternative for consumers without Google search in place? And that's what we don't know. Are the consumers missing what could be there instead?
So at this trial,
you remember Bing? Remember using Bing?
Yeah.
They're still around. They're still around.
I know it.
Yeah.
So at this trial, is it Google arguing versus the government about which remedies they should do?
That's exactly right.
Why don't they just go sit in a room? Why do we need a courtroom?
Google fought this really tough. They fought the ad tech case really, really strongly as well. So we're at this phase now where it's up to the judge. But again, the judge, I think, has been very cautious with this case. Is really, really cognizant of the precedent that exists in D.C. Circuit right now, from the Microsoft decision back in the 90s. I don't think he's going to go overboard here in terms of applying something that's kind of tailored really nicely to fit the actual allegations and not really, kneecap Google where it hasn't, necessarily done something illegally.
So what would happen on the derivative side? So in that Apple that really uses Google, are they going to lose money or do they make money? Because they don't have to pay Google.
Right. Yeah. In many ways, this is the larger issue. Google pays Apple $20 billion a year in regard to these kind of preloaded exclusivity agreements.
Apple. Okay.
You've got it. So Google in many ways, or Apple in many ways, might have more to lose here than Google. And I think that's really another issue that's part and parcel of the litigation.
Interesting.
What's the timing here?
So we're expecting a ruling on a remedy probably in August this year. The judge has been fairly good about keeping to a schedule that he's set forth for himself, and that's been the conversation around a particular remedy date. So,
okay, let's just play it forward. So if they had to divest Chrome, I know you said it wasn't likely, not your base case, but if it was something dramatic like that, how does that work? Is it its own company? Would someone else buy it? In which case, if Bing bought it, Microsoft bought it, wouldn't it be the same problem?
You're exactly right. And that's exactly the issue here is that selling off Chrome as a browser, right, it doesn't necessarily solve the actual anti-competitive harm that's part of this litigation, right? So that's exactly why my colleague Jennifer Rhee and I are thinking that's not going to be a remedy we see here in this case. And I'll give up Jennifer Rhee a plug. She's in the courtroom right now. We'll be updating absolutely on this litigation as it rolls out.
Don't you love how Jen and Justin, they're super excited about antitrust, but they make me kind of excited about it.
We might be the only people in the world.
That's a skill set in and of itself.
I mean, so it's tough to go against the U.S. government.
It is.
But it's also tough to go against Google. They got some deep pockets too here. I mean, is there an expectation of how Google's going to work in this new sandbox we have here?
Yeah, I'll say, and first of all, I'll say, no matter what happens here, we're looking at years of appeals either way. So keep that in mind too, right? That's also part of the sandbox. Maybe a change of administration down the road too. But there's been so much talk about this administration and whether or not it'll be tough on big tech. I think in a lot of ways they have said they will be, but we're still kind of scratching our heads here. How does that roll out? What does that look like? How do we address the elephant in the room that's AI with regard to regulation too? So, I think still a lot of reading of the tea leaves as to what the sandbox looks like in terms of what Google's playing in.
All right, really looking forward to how this all evolves. I think it's going to be super fascinating. Justin Teresi, Bloomberg Intelligence, antitrust, litigation, and policy analyst. I've heard that Bing is better. Not to totally bail on Bing, but
really,
I've heard it's better.
I don't know anybody who uses. Matt Miller uses ChatGPT, and when I was down at Duke, I found that all the kids use it. For everything.
Instead of Google, right?
I don't know. That's a good word. I didn't get to that. But they use it for
everything.
Interesting. All right, well,
Generational.
man. For our listeners in the U.S., here's a reminder. You can listen to us via satellite radio on Sirius XM channel 121 across the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now. Happy Monday.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Monday, everybody. It's Monday, and we're here. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We have a great hour lined up for you. We'll obviously be covering the sell-off in the markets. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, will be joining us on the latest for Trump tariffs and his attack on Fed Chair Jay Powell. Ross Matheson will be back with us on the latest coming out of Rome after Pope Francis passed away this morning. And Julie Beal, Chief Market Strategist and Portfolio Manager, Kane Anderson Rudnick will talk about her market calls right now in the sell-off. We have 24% of companies reporting earnings this week. What are going to be the key things to look at? And Mike McKee, Bloomberg International Economics and Policy Correspondent, will be previewing the IMF and World Bank spring meetings. Oh, by the way, also happening this week. But let's kick it all off for you right now with the Bloomberg Business Flash with Charlie Pellet.
All right, thank you very much. And here's what's going on. Fed independence, the big story this Monday morning with the Dow, the S&P, NASDAQ, not just in the red, but lows of the session on the S&P 500 index. We are down 2.3%, down 120 now, drop there of just about. On NASDAQ, the composite index down 424, a drop there of 2.6%. Your 10-year, 4.35%. The 2-year, 3.73%. Spot gold up $90 the ounce. We're looking at a record $34.17, up 2.7%. West Texas Intermediate crude down 2.5%, $63.08 a barrel. Bottom line here, the Dow, the S&P, NASDAQ all declining as President Trump continues to verbally attack Jay Powell over monetary policy, raising concern about the central bank's independence. As for the market backdrop, Liz Ann Saunders is Chief Investment Strategist at Charles Schwab.
You know, I'm often asked, what do you think is the biggest risk or what keeps you up at night? Those types of questions. And we've been saying for a while, Kathy and I both have, which is any serious threat to Fed independence, I think would be a serious problem for the market. And we're sort of, staring at that potential right now.
Liz Ann Saunders of Charles Schwab, and a reference there to Kathy Jones. Kathy is Schwab's chief fixed income strategist. And by the way, you can hear more of that conversation on the Surveillance podcast. Download it wherever you get your podcasts. Sources tell Bloomberg Air India is looking to take Boeing planes rejected by Chinese carriers, joining the ranks of Asian airlines vying to benefit from the trade war between Washington and Beijing. Boeing shares today down 2.2%. Again, recapping, stocks lower across the board with the S&P 500 index down 2.3%. Stay with Bloomberg for the very latest on these fast-moving markets. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast Live, and that's where you'll find us as Charlie is just reporting a broad sell-off in the equity markets here. Let's see where the action is under the hood of some of the movers. Valdana Hyrick joins us. She's a cross-asset reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Valdana, what are the names that are moving today that you're looking at?
I'm taking a look at Tesla, shares of which have obviously been under pressure this year, given Elon Musk's role in the government and the drop-off in Tesla sales that we've seen. But it's really notable that over the weekend we had Wedbush analyst Dan Ives come out with a somewhat stark note. He's possibly the best-known tech analyst and also a noted Tesla bull and a noted tech bull. And what he was saying is that Elon Musk should step back from his work at Doge and refocus on Tesla full time, given that the car maker is facing what he called a code red moment ahead of it reporting earnings later this week. What he said in the note is Musk needs to leave the government, take a major step back on Doge, and get back to being CEO of Tesla full time. Again, a noted bullish analyst on Tesla coming out with these stark words.
Here's a totally unfair question that you may not know, but that's okay. Is Elon Musk going to be on the call tomorrow?
Oh, I would be. Well, that's a great
really
question.
great question.
I would think he would be, but I don't know.
I was going to say, because Dan Ives' whole point is that he wants Musk back in the control seat.
Yes,
saying that he just needs like that direction of the company.
Exactly.
And I'm just curious as to what that's going to wind up looking like. Anyway, you're also looking at Netflix. So again, we were talking about this in the last hour. This feels a little macro-proof in some respects.
A little bit. We have shares of Netflix up some 3% today, and that's after it reported earnings at the end of last week, right before the holiday. And I think the earnings surprised analysts in a positive way for once.
Yep.
So we actually have shares of Netflix up more than 10% year to date. Obviously, the market is having a really, really tough year. So to have one of these big tech giants actually doing really well is a note of
unusual.
positive.
Yep.
Exactly.
Yep.
And so we have Netflix shares rising. It forecasts revenue for the second quarter that beat the average analyst estimate. It reported record profit to start the year. So it's allaying some of those concerns of a potential slowdown among analysts, at least.
About NVIDIA, which has been an AI darling, but not so much this year.
That's back to that basket of companies that aren't doing so well. So we have shares down more than 5% today alone, obviously hard hit year to date. Shares of NVIDIA are trading at near their lowest valuation in this AI era that we've had over the last couple of years. And investors still seem to have some concerns about buying. They're being cautious about buying. Obviously, the list of concerns is long and growing, maybe we can say. So spending on AI could slow down given the escalating trade war. And then last week we had the company also saying that one of its chip lines, the U.S. Authorities have barred it from selling it in China, something that could cost the company billions of dollars. So
you know, it's funny, if you look at NVIDIA versus Tesla on a price to earnings basis, so you have NVIDIA still at 32 times, Tesla's still at 102.
Yep.
So like just even the re-rating, it's totally crazy. All right, Vildana, thank you very much. Vildana Heinrich joining us, Bloomberg News cross asset reporter. Let's drill down more into the markets here with Vincent Signorella, Bloomberg macro strategist. Hey, Vince, where does the buck stop? Like, this is a question that editorially we laugh a lot at, but honestly, this decline now, 3-year low, you get positioning just keeps getting more bearish and more bearish. Where do we bottom out here?
I could still have some ways to go. You're still seeing a dollar dump along with dollar assets. Obviously, you're seeing equities decline. Dow's down over 900 this morning. The treasuries have been sold off. We're seeing a little bit of a rebound, but still down on the day with the 10-year yield at about 4.36. I mean, there's more to this than what Powell, and everybody's talking about Powell this morning. Is he going to fire Powell? I mean, at the end of the day, Powell's term comes up in May of next year. Powell's gone. I mean, get over it. Powell is gone. Whether it happens in May of 2025 or May in 2026, it's just a matter of time, and the end result is going to be the same. What I think is more interesting and not being talked about this morning is that China's upped the ante in this trade war big time, and it's a lot bigger than I think people realize. With President Xi in China basically saying to other nations, if you form a trade deal with the United States that impairs Beijing, we will not be dealing with you. So it's almost very sophomoric in a way, whereas if you're friends with him, you can't be a friend of mine. Very, very high school, if you will, or even grammar school even. It's a big deal because now you're looking at countries really in a box. Like, how does the EU respond? How does Latin America respond? How does Japan and Asia respond? If we do a deal with the United States, will then China cut us off? And vice versa. We don't know. Trump may turn around and do the same thing. So you've got both countries, the two largest economies of the world, trying to build a consortium of allies so that they can pit themselves one against the other who's got more friends, if you will, who's got more trade deals, and at the end of the day, it's fracturing the entire global economy, and I think this is much bigger than Powell, to be honest.
What are traders saying out there to you, Vince? I mean, do we have any conviction selling that might suggest we may be at an end to this, or not so much yet?
I don't think we're at an end to it. I think one of the tells to me is look at the steepening of the curves. You get 5s, 30s at 95 basis points. What basically traders are telling you is, look, regardless of the situation with the Federal Reserve and Trump putting pressure, the Fed has said they're going to stand pat for a while. So we're not seeing anything where there's an inclination that short-term yields, short-term yields are a little bit lower, but not on the fact that I think Powell or the Fed is going to cut, although odds have increased that a cut is coming in June. I think more in the fact that with this kind of pressure, you're going to see potentially longer-term inflation expectations, and that will steepen the curve, and that's really not good for the economy. I mean, in the long run, that's what people seeing higher inflation, lower growth. And we're seeing it in crude futures as well. WTI down 2.5% on the day. It's just not a good picture. It's painting that stagflation sort of scenario, and with that, it's hard to see a bottom in this right now.
So, Vince, I keep hearing about this over the last couple of weeks, just the chatter like, hey, when you have the currency moving lower, but yields moving higher, and you have equity market turmoil, that usually is what you wind up seeing in an emerging market, for example. You've traded currencies for decades. What would indicate to you that the dollar is trading like an emerging market currency, or there is a risk of that happening?
I don't see it as an EM currency per se, and I think there's this speculation dollar's losing its reserve status and all this elitism kind of. I think that's just journalists looking for something to talk about or to make up an acronym or something.
Ouch, but okay.
Yeah, sorry. I'm technically one as well, so I fall into that trap maybe sometimes. I think what you really need to look at is real yields. And that's an inflation-adjusted interest rates. And if you continue to see inflation going up, as we have, regardless of what Trump is saying, that there's no inflation, he hasn't been to the grocery store lately. If you continue to see inflation ticking higher and yields flat, you see this erosion in real yields, and nothing is worse for a currency than a real yield erosion, because that's what traders look at when they compare apples to apples in terms of return on investment of putting money into one country versus another. So that's a big aspect to that. So even if you see a decline in stock prices in two different countries, pretty much equivalent. If you see a decline in real yields more in one than the other, you're inclined to go with the more stable real yield return scenario. And so far, that's not where the dollar is. And that's really why the dollar is selling off, I think, and why you're seeing dollar assets decline.
All right, Vince, thank you so much. We appreciate it. That wasn't very uplifting, but he tells you the way it is out there.
Tells it how it is. He's been around.
Vince Signorello, Bloomberg macro strategist, joining us here to talk about these markets. We want to get down to D.C. because a lot of what's happening is obviously coming out of Washington and the impacts that market participants kind of assess on these markets globally. Nathan Dean, senior policy analyst for Bloomberg Intelligence, joins us from D.C. here. What's collectively, Nathan, global, Washington, D.C., what's D.C. focusing on these days?
Well, Congress is out this week. They come back next week. So a lot of this is focused on, obviously, what we saw over the weekend with the reporting that the Secretary of Defense, Pete Hegseth, had another signal chat, this time with his wife and brother, about military strikes in Yemen. So there's a little bit of the political drama that's going on with that. Obviously, it's IMF week, but I think the news this morning in terms of President Trump and the Federal Reserve, where I'm going with this is that it's a fairly quiet week, but a lot of this is going to return next week in terms of, where do we go from here? Now that the tariff negotiations are continuing to take place, you're going to have Congress come back. They're going to look at whether or not they can actually pass this resolution to extend the Trump-era tax cuts. We saw language from the White House this morning saying that they wish for these no taxes on tips or no taxes on overtime to be effective from 4 years. So I think this is the quiet week. Next week, you're going to see the news cycle dramatically ramp up as Congress returns.
Meanwhile, we've already gotten like 47,000 heads about Jay Powell this morning. Not really. I exaggerate. In reality, do you think that Trump is going to wind up firing Jay Powell?
My colleague Elliot Stein's looked at the legality of this, and if you'd asked us this question a year ago, we'd say, look, it's not legal, you can't do that. But, as Elliot's been tracking a lot of these court cases that's been going on with other agencies, there is this chance that the Supreme Court could eventually find, the ability to fire the Federal Reserve Chairman for cause be unconstitutional. But, let's just say that President Trump decides to fire Jay Powell next week. Chairman Powell has said that he's going to fight this in court. And so that is going to take time. And like we saw in the previous guest, whether it's May 2025 or May 2026, Jerome Powell most likely will be gone. So I do think that, my own personal belief is that there may be just a lot of rhetoric that's going on at the moment because, we do believe that Secretary Bessent would be telling President Trump that the markets aren't going to like this. And President Trump always will want to have somebody to lay the blame if the economic conditions of the country go south. So I do think that, a lot of this rhetoric may continue, and there will come a point where it's just easier to let Powell serve out the remainder of his term.
All right, so when Congress does get back next week, what's the to-do list?
So, we're going to see a couple of markups next week over on the House side in terms of this budget resolution bill. So what happened is prior to this recess, the House passed the Senate-backed resolution. Now, this is to extend the Trump-era tax cuts. The overall package is going to cost around $5.3 billion, and the Senate is taking the idea that the current policy is effectively zero. Now, the Senate has also said that they only want to see a minimum of $4 billion in terms of cuts. That's billion with a B. On the House side, they want to see $1.5 trillion in terms of cuts. So as they go forth and actually try and figure out how are you going to pay for these tax cuts, how are you going to pay for the $1.5 trillion in additional tax cuts, all those SALT changes that we talk about with Matt Miller, that's going into this. You're going to see language saying that we're going to cut things like SNAP, Medicare, and the Inflation Reduction Act. Our message to clients is that we think it's going to be very difficult for Republicans to come to an agreement on those cuts. And the more likely aspect of this is that at the end of the day, you're going to see a reconciliation package that increases the deficit significantly because it's much easier to deal with deficit hawks over in the House. President Trump can come down to the House and say, are you going to block my deal? Than it is to actually force Republicans to vote on things like cutting Medicaid, where their constituents are going to feel the impact almost immediately. We think that's going to happen probably in around the July-August timeframe because the debt ceiling is included and that X date is right around then.
Who in the White House right now is running policy most closely with President Trump? Do we have an idea?
There's a lot of different ideas on this, and I still go back to the idea that, President Trump runs policy by committee. We've seen this in the tariff debate. You have, Howard Lutnick, our Commerce Secretary, still going out there and actually, commenting on things like our negotiations with Japan. You have Treasury Secretary Scott Bessent. You have the Trade Representative, Jamieson Greer. But we also saw, reporting over this past weekend that you're going to have some more what I call the second-tier and third-tier individuals start to get involved with policy. Bloomberg News just put out a piece about how there's new guidance from this office called the Office of Regulatory Affairs that's going to become much more involved in the rulemaking process. Now, the reason why we care about this in the investor standpoint is that it's not going to really change things, but it could make it more difficult and more cooks in the kitchen, if you will, to actually conduct the regulation.
All right. Good stuff, Nathan. Really appreciate Nathan Dean, Bloomberg Intelligence U.S. Senior Policy Analyst, joining us there. All right, coming up, Roz Matheson, Bloomberg News Director for Europe, Middle East, and Africa, will be joining us on the death of Pope Francis. 9 days of mourning coming up now, and then what happens for the next conclave. This is Bloomberg Intelligence.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Another day of steep losses for the U.S. equity market to kick off the new trading week. Right now, we are very close to session lows of the Dow, the S&P, NASDAQ, all in the red. S&P down 2.5%, tumbling 130 points now. Again, very close to session lows. The Dow is down 947, down 2.4%, while the NASDAQ Composite Index is sinking 453 points for NASDAQ, a drop now of 2.8%. The 10-year at 4.37% with a 2-year that's currently yielding 3.73%. Spot gold up $91 the ounce, up 2.8%. West Texas Intermediate crude hard hit down 2.6%, 63.02 a barrel. Oil is retreating as traders worry about the impact of the U.S.-led trade war on energy demand, while signs of progress in talks between Washington and Tehran ease concerns about supplies from Iran. Oil stocks selling off. We've got ExxonMobil down 1.9%. BP ADR is down 2.1%. Chevron lower now by 2.7%. Bottom line here, stocks are selling off with the S&P down 2.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube, so you head over to youtube.com, search Bloomberg Podcast Live, and that's where you will find us. Obviously, one of the big news stories of the day, Pope Francis, promoter of more compassionate church, dies at the age of 88. The pontiff was praised for his focus on poverty and human suffering. He was born in Argentina, and he became the first pope from the Americas. The question is now, where does the Catholic Church go from here? Let's get the latest reporting. Ross Matheson joins us, Bloomberg News Director for Europe, the Middle East, and Africa. So, Ross, can you frame out for us kind of how the process will work, the time frame for electing a new pope?
Well, it could be quite a lengthy process. I mean, historically, at one point, it took years to select a new pope through this process known as the conclave, but it can take weeks or even months. And it will be interesting to see in this case, obviously, because Pope Francis really pushed the Catholic Church through his leadership in a more socially liberal direction than his predecessor. And that wasn't without controversy, obviously, within the church. So are we going to see a contest here between the socially liberal wings of the cardinal group? Or are we going to see a return to a more conservative, theological, less political even agenda? And so this conclave is likely to begin possibly within about 2 weeks. Normally it takes about 15 days after the news of the Pope's passing or the Pope abdicating, for example, as has also happened previously, and then all the cardinals gather. But it can only be 120, and right now they're 135, so they'll have to work that out. And then they essentially come together, they put all their electronic devices away, and they get locked up day after day while they come and have a series of votes every day to reduce the group of candidates until they get that white smoke that we know that signifies that we have a new pope. And that process at this point, it's hard to know again how long it could take once it begins. It could be over in a matter of days, but it has taken weeks or months previously.
Wow, that's definitely going to be quite a process. Roz, do we have a sense of, I mean, just talking about politically, can you just give us some broad strokes as to the time and moment of choosing this next pope in such a politically divided world?
Well, of course, Pope Francis wasn't shy about wading into the politics of the world. He often spoke about the conflicts that we've seen with Russia's war in Ukraine, the conflict between Hamas and Israel in Gaza, talking about the need to be compassionate, to have, care for those who are poor, who are suffering. And he included migrants in that. So he often talked about the need to be more compassionate towards migrants, which put him a little bit in the crosshairs of countries, including the US politically, under Donald Trump. And so he's really kind of put the Catholic Church in a slightly different direction there in terms of politics of the day. And we are arguably in a very polarized moment globally. You can see the rise of more conservative administrations again in the US. You can see the rise of the far right in Europe, in parts of Europe and elsewhere. And do we see, the selection of the Pope coming into this idea of what kind of world are we in? and what kind of world is the Catholic Church and its leadership going to represent in that world? And does the selection of the Pope, dare I say, become politicized because of it? I mean, it always is probably to some extent, but does this become even more so as a result?
Yeah, absolutely. All right, Roz, we really appreciate it. Thank you very much. Roz Matheson, Bloomberg News Director for Europe, the Middle East, and Africa. As we were discussing earlier, the market continues its downslide. You're looking at the NASDAQ almost off by 3%. Julie Beal is Chief Market Strategist and Portfolio Manager at Kane Anderson Rudnick, and she joins us now. Where's a safe haven right now, Julie?
I think for your long-term investors, this is good opportunities to be able to scoop up some of those companies that are good quality and will be around for the long term. You just have to be willing to buy those and then forget about them. I think it's a really difficult time right now for long-term investors. They want to be able to call the bottom, and it's really not possible to be able to call the bottom. You really have to be confident in what you own and be able to kind of sit still, not try to make a whole bunch of trades, and just try to own the good quality companies that you think will be there on the other side of this valley.
Julie, I like it in your notes, you quote Howard Marks, who said last week, quote, "There is no place you can look, there's no analysis you can do to determine whether today's asset prices are right for the environment ahead." Given that backdrop, I guess it's easier for a lot of people to just kind of sit on their hands here. Are you trying to be tactically smart here? Are you sitting on your hands like a lot of folks probably?
Yeah, I think Howard Marks also says this great thing that I love so much. You know, the old adage of like, don't just sit there, do something. He says, don't just do something, sit there. And I think that is something that is very
I can totally
difficult.
do that well.
In some cases, on Saturdays, I'm great at it. Totally. But in many cases, a lot of clients will be asking me, oh my God, what are you doing right now? What's changed in your process? And the answer is actually not very much, very little, because I have a lot of confidence in the 28 or so companies that I own in my portfolio. I know that they can get through difficult times because I have evidence of them being able to manage through difficult things in the past. The great thing about COVID is we really got to look and see how adaptable companies are to really difficult situations. And so when you find those types of unsexy businesses that are kind of the resilient cockroaches, those are the ones that you really want to own. And then you have to resist the urge to try to add value by doing a bunch of stuff. No more hand waving, just sit still, own good companies, do the research, and really try not to be a hero. That's not what this time is about.
This is why I love Julie. What are my resilient cockroaches? Like, yes, bring that on.
So what's it?
No, really, what are the resilient cockroaches?
The resilient, I really like the businesses that, are more data businesses. So a Verisk, where, they are the ones taking in information from insurance companies and then selling it back to them. Great business model if you can get it. That's always going to need to exist, and that's not necessarily going to be interrupted by tariffs. You're going to see just a stability and a predictability to the earnings, and that's actually what you kind of want to be looking for right now.
So what do you make of the adage of just buy value here? And I hear that a lot, particularly in times of uncertainty or stress in the marketplace, really go up the value chain. Do you ascribe to that? And what does kind of quality mean to you?
So I think that when I think about quality, to me, it is about the durability of the earnings, right? And so the style of it, whether it's growth or value, to me is much less important rather than can I predict how this business is going to perform in a downturn and how is it going to recover? That's way more important to me. I think when you're thinking about value, and I think why value has been more resilient thus far, is that you just do not have this valuation challenge and headwind that you had in growth, where you saw so many of these ultra high multiple companies. And remember, high multiples are just a function of like, how high are people's expectations, right? And the thing about expectations is your heart just gets broken when you don't meet them. Just ask my parents, right? Their heart's broken all the time.
Lies.
It's so important to kind of recognize that when you have high multiples, you have high expectations. And if you don't meet them, you're really going to get crushed. Value stocks just don't have that same problem. Their valuations are much more reasonable. And so people feel more confident that they can own those. The thing is that there's a lot in value, the traditional value that's very cyclical. And so I wouldn't necessarily say it's a great idea to be buying low multiple cheap stocks that are cyclical when you feel like there may be economic turbulence ahead.
Right. And I guess the question is, there's been a big move in value anyway, right? So it's sort of like finding value within value.
Yes. I think like We don't love the term value, right? Because I think for us, what's more important is thinking about, if you're thinking about a growth company versus a value company, I think it's better to think about it in terms of its maturity. And so a growth company, they can really use their capital that they generate internally. They still have a lot of growth opportunities internally. A value company is better served giving that cash back to shareholders because they're in a more mature market and they don't need to invest internally as much. When you separate it from that, then you're not as married to things like, okay, if I'm a value portfolio manager, I need to own a ton of banks, which like, ugh, no thanks. But like if you're a growth manager, you don't necessarily need to think about yourself as having arbitrary, I need things to be growing 20% or I'm not a real growth manager. I don't think you need to be quite as didactic. I think it's more important that you just own good quality all the way through.
So how much earnings risk do you think is out there in the marketplace, Julie? Because I've seen estimates come down, but I'm not sure they've come down enough. How do you think about that?
I agree with you. I think that I don't put a lot of stock into earnings estimates to begin with, right? If it were up to me, companies wouldn't issue guidance because I just think it's a crazy exercise when you have this much uncertainty. But what I will say is that I am surprised how much people are kind of paralyzed with their estimates. They're not taking them down. They're not really taking them down very much. And I think that that's just a reflection of what for the first quarter is going to look like in terms of earnings results. I think that you're going to see, I'm worried that you're going to see a lot of companies deciding to suspend their guidance, which I think is fine fundamentally, but I think it will spook investors if they don't have that kind of crutch of knowing like, what is this business going to earn? I don't think it's that important. I think what's more important is, can it continue to earn these good earnings over the long term? But in the near term, people are very dependent on these earnings estimates to kind of guide their decision making. And if they don't have that, I really worry it'll lose, that we'll have a loss of confidence.
One thing we did have is CapEx spend, particularly from the hyperscalers. And I'm wondering if you're expecting any sort of a shift on that at all due to the uncertainty.
Yeah, I mean, I really wouldn't be surprised. I think they have a lot of cover to be able to pull back that spending now. It's like, it's a great excuse for them to be able to say, oh God, things are really wacky and crazy. It's not that we haven't come up with a good earnings economics model around this billions of dollars of CapEx investment, it's the tariffs. So I think that they have good cover to do that. And I think it would be a positive thing because I think until we have a lot more clarity on how we're going to monetize all of this investment, I think it really gives a lot of investors pause. And I think this is a great opportunity for them to really prove out all of these promises that they've made for the level of CapEx. But it's important, right, for the broader economic outlook, right? Because so much of the CapEx growth that we've seen in the last 2 years has really been driven by the hyperscalers. If we don't have that, do we still have a great economy that, people want to invest in? It's less clear.
100%. And that was sort of the question mark that, is it just the Mag 7 and everybody else at the end of the day? All right, Julie, thanks a lot. Really great to get your perspective. I love the resilient cockroach. I'm definitely using that, stealing it. Julie Beal, Chief Market Strategist and Portfolio Manager at Kane Anderson Rudnick, joining us on her outlook for the markets. And coming up, we're going to continue that conversation with Gina Martin-Adams, Bloomberg Intelligence Chief Equity Strategist. Dig more into earnings here when you get, say, Tesla, a big chunk of earnings coming out this week. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Fresh lows of the session with a 1,000-point drop now for the Dow Jones Industrial Average. The Dow is lower by 2.6%, down 1,039 right now. Stocks are tumbling as President Trump continues to verbally attack Jay Powell over monetary policy, raising concern about the central bank's independence. The S&P is down 145, down 2.7%. NASDAQ lower by 500 even for the NASDAQ Composite Index, a drop now of 3.1%. And to be sure, the Dow, the S&P, NASDAQ all trading at or near session lows. The 10-year 4.36%, the 2-year 3.73%. Gold is up almost $100 the ounce, trading at a record, up by 3%. Spot gold now at $34.25. West Texas Intermediate crude down 2.4% now. WTI $63.13 a barrel. But again, S&P 500 index down 2.7%. We will have more on these fast-moving markets coming up in just a moment with our Gina Martin-Adams. The Trump administration may block highway funds to New York if the state continues its congestion pricing program. That according to a new letter from Transportation Secretary Sean Duffy. And Chipotle Mexican Grill taking its menu to the country that inspired its cuisine. The burrito chain plans to start opening outposts in Mexico next year in partnership with Alcia, a restaurant operator that also runs brands such as Domino's and Starbucks in Latin America. Chipotle down now by 5.7%. And shares of Yum Brands, parent of Taco Bell, which tried such an adventure a few years ago. Right now, we have got Yum Brands trading lower by 1.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thanks so much, Charlie Pellet. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. Really, Taco Bell?
I'll go to Bell. Big time.
Wow, he had a little like fist bump when we were talking about
Love
Taco Bell. I have to say, when my house up in Massachusetts is a Taco Bell, there are lines around the corner any day. Even Easter, there were lines around the corner.
Well, I'm going back down to Durham, North Carolina this weekend, which means I'm going back to
Cracker Barrel.
Cracker Barrel.
Which you didn't bring leftovers, which was just rude. So maybe next time you will. All right, let's get checking on the markets. You got the NASDAQ down 3 full percentage points. You got a big earnings week as well. 24% of S&P companies will be reporting first quarter earnings this week. Want to get the latest with Gina Martin-Adams, Bloomberg Intelligence Chief Equity Strategist, a very busy one at that. What's going to be a highlight for you this week, Gina?
Earnings for sure. We get, I think, Tesla and Google. Or I'm sorry, Alphabet. I'm so old school.
We're Google.
Alphabet.
No, we do Google. I can't. It's too hard. Like whatever.
This week, I think we get a decent amount of industrials earnings, as well as a little bit of the communications segment as well. So we're starting to really roll into earnings season. We had less than 10% of earners reported as of this morning, but we'll get close to 30% by the end of the week. So it'll be all about earnings for us. I think there are some economic data points to watch this week as well, but generally the biggest thing is earnings. And I think the biggest thing inside earnings is sales. This has been the biggest surprise so far, is how many companies are missing top line. In the first quarter was a little bit disturbing. Frankly, 65% of companies that have reported so far have missed the top line estimate, and that's very abnormal.
And that's
clearly,
not tariff related, or is it?
It's not tariff related, or at least it shouldn't be. I mean, there was certainly some tariff risk that had emerged in February and March, and maybe that was what created a slowdown in spending, made consumers nervous to some degree, but really we got the big tariff headlines in April, so it could only get worse from here. I think the biggest thing coming into this year was just an excessive amount of overconfidence, though, embedded in market prices, embedded in management commentary. It was managers thought that they could contend with this the tariff environment with no risk, and the reality is much different than I think corporates were anticipating, as well as consumers, frankly.
For a lot of investors, I think myself included, I kind of feel like this is all self-inflicted, and and until this tariff situation resolves itself one way or the other, that uncertainty is going to be in the marketplace. I mean, you could paint a bleak picture in terms of the timing, the duration of this market condition.
Yeah, and it can last for a long time because, right now we just have a 90-day reprieve, but I think on average it takes something like 45 months to strike a trade deal historically.
Okay.
So you've got a 90-day reprieve on the hundreds of, potential tariff negotiations that have to happen. It seems very unlikely that we can make that much progress in 90 days to soothe the market's concerns and create some certainty. Right now, the buzzword is really uncertainty. And what does uncertainty do? It creates just a pause in activity altogether. And unfortunately, that means companies aren't going to spend. They're not going to plan. They're probably going to cut back, assume the worst, hope for the best, but assume the worst in order to, provide consistency to their investor base. And that's not great for profits, in particular in a year in which we were already a little bit irrationally exuberant about the outlook for profits coming into this year.
Well, when you talked about the sales and 65% of companies missing sales for the first quarter, is there an area where that was most prevalent?
Yeah.
Sector-wise?
So it is and it isn't. Keep in mind, we only have less than 10% of companies that have reported. Most of those companies are in financials, industrials, real estate. A couple of consumer companies have come out and guided negatively for sales for the year. So it is concentrated by nature of the reporting season, at least so far.
Okay.
It does not necessarily mean a lot for what's to come. We have to sort of absorb earnings as they come, and certainly tech's experience can be quite a bit different than energy's experience versus financials experience, and that's worth pointing out. That said, when financials are missing on the top line, it could be evidence of a broader consumer slowdown. We certainly have seen that somewhat in the housing market as well as the auto market, a lot of volatility in sales. It could be evidence of a slowdown in business investment broadly as well, emerging as a result of uncertainty with respect to the tariffs. So financials can, in some cases, be a bit of a harbinger for what to expect for the rest of the earnings season. And I'm concerned that that's what's happening with the first quarter numbers.
And I'm looking at the earnings for the S&P 500, still about 8% growth for this year. Now that's down from 13 or 14% where it was, but still 8% and 12% for next year. I mean, could earnings growth be flat this year, do you think?
Easily. That is our expectation, is that when we run through the numbers and we say, okay, given that 40% of S&P 500 cost of goods comes from outside of the United States, you slap a 20% average tariff rate on that 40%, you're already at 0% earnings growth for the index. So 0% is certainly not in consensus of the analyst community, which is, as you correctly stated, somewhere around 8% for this year. It's definitely also not in the market, and I think that this is important. There is still this divergence between what the analysts are anticipating and what the market is anticipating. And when we run through the numbers of what the market is priced for, even at our lows back in April, in early April with Liberation Day announcements, the market was still priced for something like 15% earnings growth to emerge. It's very difficult to adjust market expectations that rapidly, even after a 20% drop in stocks. We were still sitting at irrationally high expectations for earnings growth, at least what our models would suggest.
Also, just taking into account next year's earnings, as you were saying, like 12%. I mean, how? Like when? I mean, the uncertainty there, it just seems totally bananas in terms of how you even model that at this point. Before I let you go, industrials. I'm actually much more interested in industrials in terms of their capex spend and their sales. Best guess on what we get this week.
Yeah, I think it's going to be really tough for industrials to give us a lot of disclosure. I think Delta is a great microcosm, right? Delta came out and they gave us numbers and they said, here's some scenarios for how things might go.
Sure.
That is probably the best case scenario, is you get a bunch of scenarios coming from companies as to, if we fall into recession, here's where things could go. If we get some tariff resolution on the upside, here's where our upside prospects are. Because companies don't have a lot of certainty to contend with. They know what happened in the first quarter. They can give you some evidence of where things were pre-Liberation Day. But going forward, they're very caught. And I think that respectfully results in a lot of uncertainty coming out of the companies themselves. They'll have to scenario plan.
It used to be a lot more fun to talk to you.
I know. I'm sorry.
Jeez.
I'm sorry.
She's so serious. You can see, right?
I know.
Yeah,
After 2 years of being incredibly optimistic and seeing some really great upside, it's definitely changed a lot in 2025.
Boy, just in the last couple months. Gina Martin Adams, chief strategist for Bloomberg Intelligence, talking us off the ledge here. S&P 500 off 2.9%. The Nasdaq off 3.2%. How about that? This is Bloomberg.
Listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well, so check us out there. Let's talk some economics. We have some economic data coming up this week, so I'm trying to just shift the focus even for a little bit away from the tariffs and the uncertainty resulting from those tariff discussions. Let's go to Michael McKee, International Economics and Policy Correspondent. Mike, I know you're going down to D.C. What is that meeting?
Well, I'm going into the belly of the beast,
the plane,
as it were.
Even though we think you should take the train, but that's a whole different thing.
We always argue
After
about that. Yeah. No. IMF, International Monetary Fund, and World Bank are holding their spring meetings, and then that is a sort of catch-all for a whole lot of meetings that other people have. The Institute for International Finance, which represents all the big banks, has a day-long seminar with speakers from around the world. The Atlantic Council, the Peterson Institute, Brookings, they all have events with people from around the world who are talking about the economy and what's going on.
So does it all center around one topic, which is global trade and what's going on out there?
This year it appears it appears that way, because even if they seminars have a different title, they'll probably end up on that subject. And the issue is that the United States is the one causing the problem. And the countries who are all going to be visiting can't do anything about that. They have to sort of try to mitigate the damage to themselves. And the other aspect of it is the president has not appointed a representative to the IMF or the World Bank yet. And so all the decisions that those organizations are making, they have to make without the United States input. And in theory, if the president didn't put somebody in, especially to the IMF, the U.S. could block anything that the IMF wanted to do. So it's a real dilemma for everybody that is coming down.
Do we get the sense that it'll be play nice time, or is it going to be pushback time?
It's an interesting question. I mean, these are all government officials who tend to be play nice in public. I would love to be a fly on the wall in some of their meetings, because they're not going to hold back when they can let go. But I think it's going to be people will be expressing concern in reasonably polite ways, and I guess the less polite they seem, the more angry that they are. Tomorrow, we get the World Economic Outlook from the IMF, which is their latest forecast for what's going to happen to global growth, et cetera. And I would suspect that's not going to be good news, and I would suspect it won't necessarily be friendly to the United States.
Will foreign governments take this opportunity with some of their representatives in the U.S. in Washington for this meeting to negotiate some of these trade deals that President Trump is looking for from select countries? Is this an opportunity?
It's always possible, because countries can send lots of different diplomats, and they can send trade representatives. I mean, the trade representatives normally wouldn't be involved in most of what the IMF and World Bank are doing, maybe more the World Bank, but we don't know the negotiating schedule. We don't know who is up next to sit down with Secretary Bessent. So that, in theory, would be going on at the same time, but I don't think we're going to hear anything about it until and unless there's some kind of deal.
Other than this, what else are you looking for this week? Economic data that's going to be super interesting, or is it next week that our focus should turn to?
Yeah, our for data, it's next week when we get the PCE inflation number, which is expected to be and will be lower, and we'll see improvement there.
Is next week Jobs Week also?
Next week, I believe, is Jobs Week.
I think it's Jobs Week.
I have to double check, because it's based on the number of weeks between the survey after the survey. But let's see here. We can do that very easily.
EcoGo function on your terminal. Thank
yes,
you very
everybody
much.
should have one of those. Yeah.
There we go.
The
second.
All right, yeah,
so it is.
Okay, so that's
a
big
Friday,
week next week then.
Yeah. So I guess I'll be back on with you guys.
Just then, though.
But this week we get a lot of Fed comment. Whether it will make a whole lot of difference, I don't. I wouldn't expect, because we heard from Jay Powell last week, and that kind of sums it all up. But then Saturday, the blackout period begins. Their next meeting is May 7th, so we won't hear from anybody at the Fed until then.
So I guess coming out of these meetings at the IMF, is there a statement they can make? Is there anything they can do to move the needle one way or the other? We're ready to negotiate. We're not ready to negotiate.
You don't really get much of a statement out of the IMF. We've already heard from Kristalina Georgieva, the IMF managing director, and she kind of put cotton candy around her criticisms. But we might get a statement from the G20/G7. They usually put out a statement. Now it's going to be hard this time, because they're not going to see things the same way as the U.S. So if we did get something, it might be relatively anodyne and leave out any particular country criticism.
Anodyne. Anodyne. How do you? What does that mean? Hold on. Hang tight.
Kind of bland.
Not likely to provoke dissent or offense. Inoffensive, and often deliberately so. Thank you so much. I learned so much from Mike McKee.
Today's show has been brought to you by the letters A.
Yeah, exactly. All right, Mike, thanks a lot. Michael McKee, Bloomberg National Economics and Policy Correspondent. We'll be looking forward to those IMF and World Bank spring meetings as well. What we're not looking forward to is what's happening in the market. If you are long, if you're short, it's a good day for you. The NASDAQ is still up by 3.2%. The S&P, Paul, off almost a full 3 percentage points yet again. So I go away for a week. Apparently
Yep.
there's some calm last week.
A
Did
little
that
bit.
happen? And then
A
look what
little.
happens when I come back.
Yeah, it's just been tough, and we're trading at the day's lows here, so still setting intraday lows. We'll keep an eye on.
Oof, all right, it's going to be a little brutal. Volumes, though, light because we have Easter Monday, so all of Europe was closed as well. That wraps it up for me and Paul on this Monday. Balance of Power with Joe Matthew is coming up next, right after this global news update. Happy Monday.
This is CBS News on the Hour, sponsored by Steel.
I'm Peter King. The Trump administration and Pope Francis have had many public disagreements, but the president has ordered all flags on federal buildings to fly at half-staff in his memory.
He was a good man, worked hard. He loved the world, and it's an honor to do that.
Francis is being remembered as a generous man of heart and spirit. CBS News consultant Monsignor Anthony Figueroa.
Even in death, he said, we can continue to love, we can continue to give of ourselves, and that, I really believe, is what Francis wants us to do.
The Vatican announced the Pope's death early this morning, weeks after he was hospitalized for 38 days with double pneumonia, and just a day after his last appearance in public at St. Peter's Square. Just last year, CBS News correspondent Nora O'Donnell had a wide-ranging interview with the Pope. He's heard here through an interpreter.
When you look at the world, what gives you hope?
Todo. Everything. You see tragedies, but you also see so many beautiful things. You see heroic mothers, heroic men, men who have hopes and dreams, women who look to the future. That gives me a lot of hope.
With the Pope's death comes speculation about who his successor should and will be. A conclave to elect a new pope is probably 3 weeks or so away. Monsignor Kevin Irwin is a New York priest and former dean at Catholic University School of Theology and Religious Studies.
When he was hospitalized, the cardinals began to think, who's going to be next? Before the conclave, there were several days of meetings of the cardinals where they give speeches, and that's kind of the beginning of real discussion about who it should be.
Defense Secretary Pete Hegseth is downplaying reports that he included his wife and brother on a secret chat about U.S. attacks on Yemen using the Signal app. Instead, he blames the media for reporting it.
We're changing the Defense Department, putting the Pentagon back in the hands of warfighters, and anonymous smears from disgruntled former employees on old news doesn't matter.
The president says he still stands behind Hegseth. It's Marathon Day in Boston. The men's division has a winner, as seen and heard on ESPN.
John Greer is the man who is going to meet the moment in Boston. Champion of the 129th Boston Marathon.
Career is from Kenya and joins his brother Wesley as a Boston Marathon winner. They say investing is a marathon too, but it's become too much for some investors to bear right now. The Dow is down nearly 1,100 points. The Nasdaq has lost 509. This is CBS News. An entertainment power couple has apparently gone very public.
Billy Ray
Miley Cyrus and Elizabeth Hurley have jointly posted an intimate photo to Instagram of the singer planting a kiss on the actress' cheek as they stand in a green pasture in front of a post and beam fence. He's wearing bunny ears and a denim shirt. She, plaid flannel and a straw cowboy hat. The caption from Hurley, Happy Easter. She sparked speculation about a relationship April 9th when she used another Cyrus song.
She's not crying anymore.
Tagged the singer in a photo of herself in a bikini in the Maldives. Deborah Rodriguez, CBS News.
Scotland's annual Corgi Derby is in the books. 4-year-old Juno outran the field of 16 tiny, fast dogs, coming from behind to beat last year's winner. The Derby is a salute to Queen Elizabeth II's love of the dogs. Peter King, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Patriots Day edition as markets tumble again with President Trump's warning of an economic slowdown. In the absence of Federal Reserve rate cuts, Trump calls Jay Powell a loser. We'll talk about it coming up with Bloomberg Politics editor Laura Davis. And there's another Signal chat. This time it's on the Defense Secretary's phone. New questions today about how long Pete Hegseth can last at the top of the Pentagon, which we'll get into following two major hit pieces with our political panel. Jeannie Shanzano and Rick Davis are with us for the hour. As we start, as always, on Wall Street, let's get to a very tough ride so far in the markets with Charlie Pellet. He's got his eyes on stocks and bonds for us. Charlie, here we go.
Thank you very much. Right to the numbers here again. Joe Matthew, fast-moving markets to the downside. Back to work Monday. Steep losses. We have got the S&P 500 index very close to session lows. Right now, the S&P is down 1,085 points. That is a drop now of 2.8%. The S&P just above 38,000. S&P 500 index down 149, now down 2.8%. The NASDAQ down 503 points, down 3.1%. And to be sure, very close to session lows. The 10-year 4.36% with the 2-year 3.73%. Gold is up $92 the ounce, $34.19. Looking at a record on the precious metal, up 2.8%. West Texas Intermediate crude now slumping 2.8%, $62.85 a barrel. And Bitcoin just above 88,000. Bitcoin right now up by 3.4%. Bottom line here, the Dow, the S&P, NASDAQ all tumbling as President Trump continues to verbally attack Fed Chair Jay Powell, calling on Powell to cut rates as signs mount that the president's trade war is pushing the U.S. economy toward recession. Shana Sissel is president and CEO of Banrian Capital Management. She says the Federal Reserve cannot be subject to political whims.
It is a very, very bad precedent to allow political influence in Fed decisions. The Fed is supposed to be independent. We need it to be independent. We do not want a Fed that is influenced by the political leanings of the president, no matter what.
And again, the Dow, the S&P, NASDAQ, all very much in the red. No dip buyers coming to the rescue today. NVIDIA shares, meanwhile, trading near their lowest valuation of the AI era. But a growing list of perils has investors cautious about taking advantage of today's dip. NVIDIA now down by 5.3%. Recapping a 2.8% loss on the S&P, very close to session lows. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet. Wow, I'm convinced, Charlie. This is a rough go on the markets. We're going to be, of course, keeping very close tabs on Wall Street today, keying off what's happening here in Washington or not happening, depending on who you ask. It's got a lot to do with Donald Trump's feelings about Jay Powell, who, of course, is not in the process of cutting interest rates. But happy Patriots Day. If you're with us in Boston, if you're listening right now on 92.9, I hope it's a good one. Marathon Monday. This is the good stuff. Sometimes we forget on a day like this on Wall Street. And a big day for John Career. How about that? The name echoing down the canyon on Boylston Street, winning the elite men's division. Red Sox are up too, right? James, keep me honest on this today. Look at that, 4-1 over the White Sox. So there's some good things if you're from Boston. Meanwhile, Jay Powell is a loser, so says the President of the United States. Thanks for joining us here on the Monday edition. That is where we start on Bloomberg Radio, on the satellite radio, channel 121, and on YouTube. Find us now. Search Bloomberg Business News Live. With these costs trending so nicely downward, the president writes on Truth Social, just what I predicted they would do. There can almost be no inflation, he says, but there can be a slowing of the economy unless Mr. Too Late, a major loser, lowers interest rates now. Europe has already lowered 7 times. He goes on to explain that Powell has always been too late, with 1 O, except when it came to the election period, when he lowered it in order to help sleepy Joe Biden, later Kamala, get elected. How did that work out, question mark. Laura Davison has to snap to attention when things like this are posted on Truth Social, as our Bloomberg politics editor here in Washington, and with us at the desk now to help make sense of all of this. Mr. Too Late, is that sticking for Jay Powell?
He has continued to use this phrase. Yeah. He's been testing out a handful of different nicknames here for Powell, but Powell has clearly been on the president's mind. We got a flurry of Truth Socials late last week after Powell gave that speech saying, hey, tariffs maybe are not going to be so great for the economy. They're not going to be great for inflation. Yeah. So we've really seen sort of a perceptible uptick in the president's ire towards the Fed chair just over the past 4 or 5 days here.
So he's basically predicting an economic slowdown because we're not going to get a Fed rate cut likely anytime soon. Everybody goes to work. They see the Dow's down 1,000 points. What's the political implication of that?
Well, it gives Trump a little bit of cover if there is an economic downturn for whatever reason, whether that's related to interest rates or whether that's related to tariffs or uncertainty in the economy generally. He can say, look, he's basically setting Powell up to be the fall guy here of, look, it's not my policies. This is the Federal Reserve chairman, which then, he does have the ability to pick the new chairman in a year. Yeah. So there's lots of discussions on, who are these names that are coming up? Could he have someone like a shadow Fed chair? This was an idea that was floated a couple of years ago. Basically have someone sort of pulling the strings, sort of weighing in, giving a separate signal to markets on where monetary policy is going. There's a lot of investors and folks in the White House, too, that think this is a very bad idea, to be clear. Yeah. But they're looking at everything.
We talked to Scott Bessent on this very program at this very table about the idea of a shadow Fed chair. Is that, I know that's being talked about again today. Is that where this is going? We'll just make our own?
It is something that they're discussing. I don't know how likely it is that it actually come to fruition. I think that you have a lot of people in the White House who say, look, that this is going to be really freak markets out, really freak investors out, and that's not the right direction to go. You also, if you do appoint someone, that person then probably loses a lot of credibility when it comes to actually being the Federal Reserve chair. So that you may not find a lot of people willing to sort of take that job.
Fair enough. Yeah. Interesting reporting in the Wall Street Journal talking about a day in which the markets were kind of like we're seeing now, falling out of bed. It was the 9th of April, and we were approaching this major announcement on reciprocal tariffs, right? And there was a drive to pause the tariffs by Scott Bessent and Howard Lutnick, and they had to wait to find out when Peter Navarro was going to be in a meeting with Kevin Hassett so they could get the boss alone. What does that tell us about where we are in this argument and the consistency within the administration on tariffs?
It really shows that these factions are forming, and that you have sort of the folks who come from Wall Street who are very sensitive to markets and less on the tariff train, essentially, are trying to get the president get him to make these decisions when other people are physically not there. Those are the same kind of lines that you see being drawn as well over.
What point does Donald Trump respond? Do we need more than a 90-day pause?
It's very likely he wants to negotiate 60. These are going to with each country. Just doing that takes time. Even if you do one a day, you're basically out of time. You need to get one a day done for the next several days to meet that 90-day pause. That's very likely to happen. And we could also see bond markets as well as equity markets start freaking out as we get into July when this comes. But I can almost guarantee that pause, the extension of a pause, if it comes, it will come on day 89 or 90.
Which the market loves here, right? The Easter egg roll today I don't know if you were over there playing games on the White House lawn, but he was out there with the First Lady and the Easter Bunny. Something about that image of him with the Easter Bunny while he's saluting was a little bit odd. He seemed to be having a good time. He was smiling, he was laughing.
You had Trump. He made a handful. Did briefly mention it. We're going down the stairs. There where he another signal chat where he
you never know exactly Capaccio. We're asking, then it was
seems to be safe. And Tony Capaccio. Wow. What we're hearing from the White House side is that Trump doesn't want to start firing people, and particularly Susie Wiles does not want to start having people get fired. That causes divisions. Sort of once there's a sort of a sense of once Trump gets a little taste of firing someone, he wants to start kicking other people out.
Counterpart.
The White House has said that they're investigating this first signal chat situation. It's possible that they will also announce an investigation into this situation as well. But it is looking like Hegseth is going to be able to keep his job. He was out with the cameras, saying that he and President were on the same page.
You never check someone's appointment, like in Outlook, to see if they were busy in a meeting to do something else at that same time? Did you ever try that?
Absolutely not.
You've never
Don't
done
tell
that
my
before,
bosses
right?
that
I've never heard of anything like that. It seems like Mr. Besson and Lutnick started something new. It's amazing. Laura, thank you as always. Laura Davis and the best of the business on the fastest show in politics. We'll have a lot more with Mr. Capaccio next.
6:21 on Wall Street. We do check markets all day long here at Bloomberg. Very close to session lows again for the Dow, the S&P, and NASDAQ. Stocks are tumbling as President Trump continues to verbally attack Jay Powell. S&P right now down 148. That is a drop of 2.8%. Dow Industrials down 1,063 now, a decline of 2.7%. The NASDAQ Composite Index is down 500 points for NASDAQ. That is a drop of 3.1%. The 10-year at 4.36%, the 2-year 3.74%. Spot gold now at $34.14 the ounce, a record of $87. Spot gold up 2.6%. West Texas Intermediate crude down 2.8%, $62.84 a barrel, and Bitcoin now up by 3.3%, $87,945 on Bitcoin. Airbnb down 2%, says it will by default show customers the total price of stays, including cleaning and service fees, to comply with an FTC rule that's set to go into effect next month. And Marathon Monday in Boston, John Career of Kenya joins his brother Wesley as a Boston Marathon champion. They are the first brothers or relatives of any kind to win the world's oldest marathon. He mastered the 26.2 miles in an unofficial 2 hours, 4 minutes, 44 seconds, second fastest winning time in race history. Among women, Sharon Lokedi of Kenya has won the marathon in record time. Again, recapping, stocks lower, S&P down 2.8%. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. Watching Wall Street for us every day here on the fastest show in politics, the great Charlie Pellet, the voice of Wall Street and the New York subway. We need you now, Charlie, and we'll be back shortly to see how things are playing. This has everything to do with Washington today. Boy, it's like last week or the one before it on rerun. Day 90, by the way, if you're playing along on your home game of the second Trump administration, with another 1,000-point drop in the Dow after the president takes to Truth Social to call Jay Powell a loser. Now, if you're trying to clean things up, say at the Pentagon, following a very difficult week and a series of hit pieces, do you go to the White House Easter egg roll to do it? Do you enlist the Easter Bunny? Because that is essentially what happened today. A short time ago, Pete Hegseth, rebounding from a couple of very difficult pieces of reporting, one in the New York Times, the other in Politico, suggesting there's another signal chat, that it's a Pentagon in disarray. He's been pretty busy on the phone, it turns out. Unless you ask the defense secretary, who denied that reporting a short time ago on the White House lawn as the kids were rolling the Easter eggs. Watch and listen.
This is what the media does. They take anonymous sources from disgruntled former employees, and then they try to slash and burn people and ruin their reputations. Not going to work with me, because we're changing the Defense Department, putting the Pentagon back in the hands of warfighters, and anonymous smears from disgruntled former employees on old news doesn't matter.
I mean, I suspect he wouldn't have had the horn playing if he was at the Pentagon, right? You get a full soundtrack over there. Everybody seemed to be in a great mood at the Easter egg roll. Even Don Jr. was there blowing the golden whistle. First Lady was there holding hands with Donald Trump. Not exactly the forum you would expect to find the defense secretary in today. Here's a quote for you. There are very likely more shoes to drop in short order, with even bigger bombshell stories coming this week. That's from a guy named John Elliott, left the Defense Department last week, former Defense Department official. He was responsible for one of the two hit pieces, taking an op-ed at Politico there to refer to a Pentagon in disarray. Tony Capaccio makes his living over there at the Pentagon and sees all this stuff up close, was prolific with us about the first signal chat, and he's back now with another. Here on the other side of the river, Bloomberg Pentagon reporter Tony Capaccio. You got a big following online. People always look forward to you coming over here. Maybe it's because I'm usually calling you about a very large and controversial story.
It's flattering, but it doesn't go to my head.
No, I don't know about that. But you wonder, you start hearing the questions, how long is he going to last? This is like a rerun here, and the White House is digging in. He says basically that it's untrue, it's fake news. The White House says they're going to stand by their man. We just had 4 very important departures at the Pentagon the end of last week. You can't deny that part. This is a big problem.
Right. And not only they happened Friday, so you had 3 people 2 of them were very close to him. They worked for him at the Concerned Veterans for America. Excuse me. Dan Caldwell not only worked there, I didn't realize this, but he actually helped vet people for Hexeth when Hexeth was confirmed. He was a handholder, it said, who selected people who would work for Hexeth. Very close. Very close. So Friday, he came out with a Twitter feed criticizing the removal.
A joint statement.
A joint statement for the 3 people. Friday at midday, or late afternoon, the New York Times comes out with a story about the second signal channel. And then at 7 p.m., John Elliott's editorial was posted on Politico. It seemed pretty coordinated, like the Revenge of the Jedi, if you're a Star Wars fan.
But these guys were shown the door, presumably, for leaking already, right? So they've got more to leak.
That's you saying that, not me.
Okay. Were they not alleged to have been, or is that simply
no? They're alleged to have been leaking. I'm not going to put a correlate, but two and two together on these stories. But your viewers are smart.
Yeah. Well, you have to be careful who you fire sometimes.
It all comes out. The 7 p.m. Politico thing was kind of it showed me it was moderately coordinated.
Dan Caldwell, Darren Selnick, Colin Carroll, and the aforementioned John Elliott. What's he talking about with more bombshells to drop this week?
I kind of know, but I'm not going to say.
Really?
Yeah. I don't think it's this week.
How long does this barrage continue then?
So I think here's a couple things. He's at the Easter egg roll today.
Yeah.
I think a lot of Washington is going to be wondering what rolls next.
Okay.
From the shoulder up. In 2 weeks, he'll be before the Senate Armed Services Committee on a military posture hearing. This may be his make or break moment because he's going to get shot at from various venues. And the president's chief of staff, Susan Wiles.
Susan Wiles, yeah.
Susan Wiles. She's going to be watching that closely because she's kind of a key, from what I understand, to his survival. If she thinks he's a liability, he could go. One thing I want to make the point, though, too, it's a good thing the United States doesn't have a national security crisis at the moment. Panama and the canal issue is not a military crisis. Going after the Houthis is not a military crisis. It's a good thing there's not a major crisis where U.S. troops are heavily involved.
Hexeth, before we heard the remarks we just heard on the lawn, took to Twitter. This was on Easter night, 10:45 p.m. This is Easter. Your agenda is illegals, trans, and DEI, all of which are no longer allowed at DOD. He was responding to a Democratic Party tweet suggesting that he stepped down. This is not an administration that's looking to have a conversation about this. He could survive for some time, no?
He could survive for some time as long as these are similar allegations. If there's some new thing out of left field.
It would take something classified. The White House says still not classified. He's putting out timing on F-18s flying to Yemen here, which is pretty remarkable, not unlike we saw in the chats that were shared with the Atlantic. Flight schedules for the F-18 Hornets targeting the Houthis in Yemen. That's not fireable.
It's not fireable if you're this administration, but that's a key piece of information. If you're a more sophisticated adversary than the Houthis, who could have intercepted that and cued their air defenses to shoot down those non-stealthy F-18s.
4 guys are shown the door like this, several of them at least close to Pete Hegseth until now. What does that do for morale inside the Pentagon?
My understanding that the words I'm hearing, this is a clown show.
Clown show.
Yeah, this is one exact quote. From a business standpoint, from a Bloomberg audience standpoint, Colin Carroll's demise is particularly interesting because he was Stephen Feinberg's chief of staff, his handholder, his scheduler, his funnel for information about a building he knows nothing about. But my understanding is that Mr. Feinberg is being fire-hosed with information. And so he's absorbing and learning. But he's going to be out there on his own. From the Bloomberg audience standpoint, this is the key kind of an appointment they should be watching in terms of who the next chief of staff is, because Mr. Feinberg's policies could have major impact on companies.
On procurement.
On procurement, acquisition, the lash up with Silicon Valley. This is a kind of a key constituency for Bloomberg audience and the defense industrial base in general.
Fascinating. Are we on the verge of an announcement? And I'm not trying to change the subject here, but I wonder if this could actually turn our focus at the Pentagon, the announcement of the next generation Navy fighter jet.
No, I don't see there as a correlation. My understanding, I was following this pretty closely until about a week ago. It's held up at the Pentagon level in terms of funding issues.
Okay.
How do you pay for it in the 26 through 30 budget?
Imminent.
I don't think there's a connection between
What could be imminent is the first $1 trillion defense budget by the time they're done with this reconciliation bill. Do you see it happening?
Yeah, I mean, I wouldn't go too far overboard. It's because Secretary Austin, on his way out, in the story we broke, suggested about $1 trillion for FY 26 and hitting $1 trillion by 27.
Well, that's a far cry from Doge, knocking the stuffing out of the Pentagon. I thought defense stocks were falling out of bed a couple of weeks ago because Elon Musk was going to eliminate all these programs. You're suggesting it'd be bigger than ever.
It was Austin's idea, and the Trumpies are following it.
Okay, well, we'll see, I guess, what Pete Hegseth has to say about that. The testimony that you mentioned is important. It's 2 weeks away.
Roughly 2 weeks away.
You're either going to see some real bad stories between now and then, or something actually move, something change in the leadership of the Pentagon, no?
My sense is you'll see more bad stories, but this is going to be a theater. Chairman Wicker is probably going to have to show some tough love and lay into him. Yeah. There's going to be all eyes on how Hegseth performs, how defensive he gets, how offensive he gets, how linear are his explanations. He's going to take a lot of slings and arrows of outrageous fortune. Is that what they say?
Well, yeah, if you're getting poetic on us now. You wonder where Donald Trump is with all of this. They tend to have Caroline Leavitt, press secretary, somebody go out and say something nice. He did speak today about enlistment being at a record high level. He's standing there literally with the Easter Bunny up on the balcony talking about this. He didn't mention Pete Hegseth, but it's
the numbers have gone up.
Not a question as to why.
The numbers have gone up. It's pretty impressive, but they have gone up.
Mm-hmm. And
so whether the retention, though, whether they actually, you want to watch those numbers, the retention numbers, and how many people leave the service over the next year.
Is this the best thing that happened to Michael Waltz recently? Funny they've been keeping him real quiet since the first signal chat.
Because it diverts attention from his signal chat?
Sure. I don't mean to get conspiratorial on you here, but he's been very quiet. Haven't heard that name in a lot.
He has not been on the talk shows. This is true. Mm-hmm. They had a flurry of EO executive orders a couple of weeks ago that he had some hand in, so I think they're still basking in that afterglow.
He was at the cabinet room table sitting next to the boss for Giorgia Maloney's visit. That was the first time I've seen him kind of a place of prominence. Today, though, it's Pete Hegseth and the Easter Bunny. You imagine seeing Leon Panetta, William Cullen hanging around the Easter Bunny doing something like that?
Today? I can't even imagine, or Rumsfeld in particular. That would be an incongruous image.
There are knowable unknowables.
No, unknown unknowns. Yeah.
Fair enough. Thanks for coming to talk to us. I can't imagine what you're going to have next, but let us know when you find out. With us from the Pentagon, he's nodding if you're listening on the radio. Tony Capaccio, our great Pentagon reporter, with the latest from what we're told is a Pentagon in disarray. We'll find out if there's any truth to this, because we do this every day from Washington, and we'll get our panel's reaction next. Rick Davis, Jeannie Shanzano are on the way in here on the fastest show in politics. It's the Monday edition of Balance of Power, right here on Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word that President Trump is set to meet with major retailers at the White House today to discuss the impact of sweeping tariffs on their businesses. The meeting includes representatives from Walmart, Home Depot, Lowe's, and Target, and comes amid a 90-day pause in Trump's higher tariffs on trading partners except China. Right now, Walmart shares down 1.1%, Target tumbling 1.3%, Home Depot down 2.9%, and Lowe's down by 3.2%. Stocks are tumbling after President Trump continued to verbally attack Fed Chair Jay Powell, with the S&P 500 index off session lows but down 136, a drop right now of 2.6%. Dow Industrials down 969. That is a decline of 2.5%. Nasdaq down 464, a drop of 2.8%. 10-year 4.38%. The 2-year 3.74%. Spot gold up $84 the ounce, up 2.5%. Gold $34.10 the ounce. And West Texas Intermediate crude down 2.6%. $62.97 a barrel on WTI. There is a fresh batch of industry data suggesting U.S. economic growth is fading. And with that story, here's Bloomberg's Vinny Del Giudice.
The index of leading economic indicators posted the largest decline in more than a year in March. The Conference Board report is intended to chart the American economy's trajectory. Consumer sentiment, the stock market, and manufacturing led last month's retreat. Labor market and housing data showed little change. Looking ahead, the Federal Reserve issues its regular report card on the U.S. economy on Wednesday, the Beige Book. Vinny Del Giudice, Bloomberg Radio.
Marathon Monday in Boston. John Courier of Kenya joins his brother Wesley as a Boston Marathon champion. They are the first brothers or relatives of any kind to win the world's oldest marathon. Sharon Lokedi of Kenya won the marathon for the women in record course time. Again, recapping here, U.S. stocks lower. S&P right now down 135, drop there of 2.6%. And balance of power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, Red Sox leading the White Sox now. Sixth inning in Boston. It's a good day in the city of Boston, and we welcome all of you who are listening on 92.9 FM. Thanks for being here on the fastest show in politics. Bloomberg Radio is far-reaching, you know, not just Boston, not just here in Washington on 99.1, but of course nationwide on Sirius XM channel 121 and on YouTube. Find us as ever by searching Bloomberg Business News Live. On Patriots Day, at least in some states, in Washington, D.C., of course, well, it's another day to be watching the markets here. With Charlie's help, we'll keep doing that through the program after Donald Trump took to Truth Social to call Jay Powell a loser. But it's an interesting day here as we consider the full Ginsburg. I, by the way, did check. They have already updated the full Ginsburg wiki page to put Senator Chris Van Hollen there as the latest to pull off this remarkable feat. All the Sunday shows live. Does anyone actually know who William Ginsburg was? Monica Lewinsky's lawyer? Anyway, for the old people. The reason why he was out there is because he actually got some time in El Salvador with Mr. Abrego Garcia. You saw the images, I'm sure, over the weekend. Were those margaritas? Yeah, they were pretty close to the swimming pool at Chris Van Hollen's hotel. But he said it was a mission accomplished moment for him to simply get time with Mr. Abrego Garcia. Over the weekend, the Supreme Court issued a ruling, by the way, halting all Alien Enemies Act-based deportations. And it's interesting when you read the writing. The court indicating a deep skepticism, this is a quote, a deep skepticism about whether the administration could be trusted to live up to the key part of an earlier ruling. After the government had deported a different group of migrants to a prison in El Salvador. So we'll see where this goes here. The administration is not budging, and you don't need to look any further than Sunday morning TV to watch that. The aforementioned Chris Van Hollen, the gentleman from Maryland, on ABC This Week. Listen.
What Donald Trump is trying to do here is change the subject. The subject at hand is that he and his administration are defying a court order to give Abrego Garcia his due process rights. They are trying to litigate on social media what they should be doing in the courts. They need to put up or shut up in the courts.
Two most important words you just heard, due process, right? He referred to due process rights. That's the way Democrats are getting to this. The administration says, hey, we're trying to get bad guys out of the country here. Are you serious? You want to bring this guy back for due process? Tom Homan was asked about this. The president's border czar was also out on Sunday morning television. Here's Tom Homan on CNN.
I stand by the fact I think we did the right thing here. We removed a public safety threat, a national security threat, a violent gang member from the United States. ICE intelligence says he's an MS-13 gang member. A confidential informant says he's an MS-13 gang member. The country of El Salvador says he's an MS-13 gang member. I think he's exactly where he should be.
Okay. Get ready for the parade of lawmakers, Democrats specifically, in San Salvador now that Van Hollen has done so. Now, by the way, they're not all going to get full Ginsburgs. 4 House Democrats are on their way. Robert Garcia, California, Maxwell Frost, Florida, Maxine Dexter, Oregon, Yasmin Ansari, Arizona. Meeting with officials at the embassy in El Salvador, receiving classified briefings, we read. There was a request to make these official delegations, and apparently that request was denied. Let's assemble our panel. They're back with us on a Monday. Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors. He is our Republican strategist and partner at Stone Court Capital. Jeannie is our Democratic analyst and political science professor at Iona University. Jeannie, I don't know your thoughts on Chris Van Hollen. The administration says he was played, and he was even asked about that in some of these interviews. He says, no, I wasn't played. Yeah, they tried to get a nice beauty shot of us out there by the pool, but the fact is I went down there to meet with him, and I succeeded. Was it time well spent? Was it worth it?
You know, I think it was. I do think that Gavin Newsom is on to something, as is Richie Torres, that the Democrats have to be a little cautious here, and they can't get sidetracked. The reality is just what you talked about, Joe. This is not about Abrego Garcia. This is about due process and following the rules and the orders of the Supreme Court and the federal courts in the country and the law. Plain and simple. Beyond that, the real story of the day and the year for Democrats has got to be the chaos in our financial system and the impact it is having on their constituents at home where they live. So, you know, but that doesn't mean you can't do both. So, you know, I don't know if everybody needs to go down there. You know, there's a little bit of a cattle mentality. It is fine to go down there, but the reality is, follow the law, Mr. President and administration, and please, please fix the financial chaos in the markets and don't contribute to it, even though you set it off, pull it back.
Does Chris Van Hollen look smart this morning or not, Rick Davis? And I ask you that having heard from you last week. You described occasions when John McCain would go visit a place where leadership may not want him to be. Was this good politics, or was he played by the administration?
Yeah, he did what John McCain exemplified, you know, throughout his career, which is one man can make a difference. John McCain showed up in a bunch of really threatening places, demanded to see political prisoners, you know, put away, talked about democracy. I mean, he had a different reason for doing what he was doing. But Chris Van Hollen showed that one person getting on a plane and showing up can create a controversy. And I think that's all he was trying to do, is keep that issue alive. Make the point to the American public and to the media that regardless of whether or not you know anything about Mr. Garcia, he has not gone through a process, a due process, and that is the issue. And it was echoed by the courts, as you pointed out earlier, even the Supreme Court halting Venezuelans from being deported. There needs to be a real conversation around the implementation of these emergency powers that Donald Trump has done as to whether or not they're appropriate in the world we live in today. And to be able to say I can deport anybody I want to, regardless of whether they've been convicted of a crime or given due process, is just not, you know, what we think of as being lawful in a community of people. And that's what Chris Van Hollen plugged into today, you know, this weekend.
Jeannie, you mentioned the two causes here, this being one and the economy essentially being the other, the economic policies or lack thereof, depending on who you speak with coming out of this White House, the reason why the market is down sharply again today. Enter Hakeem Jeffries' Cost of Living Week of Action. He also was on Sunday morning TV talking about this, Jeannie. A cost of living week of action. We have to continue to talk to the American people about our plans. Who's listening?
Well, Americans are, and he's absolutely right. I have to admit, Joe, I am not a huge fan of these week designations because it always brings me back to our infrastructure weeks, and, it just has a bad feel. But he's absolutely right. That is what the Democrats and Republicans, by the way, this is not party oriented, need to focus on, which is what Americans are experiencing right now. And the real message from Democrats has got to be all of the chaos and all of the craziness and all of the messiness that, by the way, got Abrego Garcia down there and has gotten us into this mess with the economy is because we have a president who is completely undisciplined. So while Americans may have voted for him and appreciate what he said he was going to do, what he has done in just 90 days is create chaos in almost every major department of our government and every single issue people care about, whether it's foreign policy, whether it is the economy, whether it is Social Security, Medicare, Medicaid. That's what they need to focus on. So Hakeem Jeffries' instinct here is right. Democrats need to show the American public that they hear them when they say this kind of what some people are calling a clown show cannot continue as it pertains to the financial way in which the president seems to be running the government. And the latest we hear, of course, are absolutely insane things like one person is out of the office, another person comes in, talks to him, and he signs a 90-day reprieve on tariffs. That is no way to implement serious policy.
The president was talking earlier at the White House Easter egg roll, Rick Davis, about military enlistment going through the roof. He was, I guess, making some reference to the Pentagon on a day when Pete Hegseth is under attack. And he talked about the economy doing so well under his watch. You've got the Dow Industrial Average down 1,000 points, which is something that people actually talk about when they go to work here. This is going to be the conversation right now at lunches all around the country, whether people can afford to go out or they're eating at their desks or whatever it is. This is the backdrop to everything else that we're talking about here. I'm looking at you here on YouTube with a big red headline across the bottom of the page here. S&P 500 slumps as Trump reiterates call for lower interest rates. The corrosive effect here of what's happening in the stock market is hard to overstate, and it makes us question everything else that we're looking at. What does Donald Trump think about this as he's sitting in the Oval right now?
Look, I mean, he's got a financial plan that even by his own description was going to cause some pain. I think that he probably hadn't anticipated as much pain being inflicted on people who own stocks and bonds in this country is that what's happened. The reality is he really owes it to the American public to use that bully pulpit to go on TV and explain how all these things that he's doing in the financial sector is going to somehow benefit them in the short, medium, and long run. We've seen the collapse of consumer confidence since he was elected president, collapse of the stock market, collapse of the bond market. I mean, how many presidents have ever been able to withstand this, incredibly fast change toward the negative on people's, 401ks and other things without addressing that to the American public, and there is a growing chorus that this is all self-inflicted. That we had a roaring economy coming into Donald Trump. Everyone thought that would just be put on steroids, and in fact, we've had exactly the opposite. So I think the guy's got to go have a conversation with the American public. No more rallies. Sit behind that desk and have a conversation as to how these tariff regimes and how his threats to remove Jay Powell are somehow good for our economy.
Boy, imagine an Oval Office, a primetime Oval Office address from the president on script. It actually would be quite a moment for him as he calls the Fed chair a major loser. If you're wondering why the markets are tumbling today and what we're talking about, this post on Truth Social by Donald Trump, there can be a slowing, he says, of the economy, essentially predicting an economic slowdown unless Mr. Too Late, a major loser, lowers interest rates now. The president of the United States on this Easter Monday, 2025. Much more to follow with our great panel. They're both with us today. Rick Davis and Jeannie Shanzana will be back in hour 2. Kaylee Lyons will be with us, and we'll welcome our global television audience to the conversation, along with Congresswoman Nicole Malliotakis. The Republican from New York will be with us to talk about all of this, congestion pricing and reconciliation. It's all ahead right here.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Wall Street points lower again as President Trump calls the Fed chair a major loser. Welcome to the fastest show in politics as the president taunts the Fed chair for not cutting interest rates. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for being with us on the Monday edition of Balance of Power here on Bloomberg TV and radio. Here we go again, Kaylee. The president essentially in this post on Truth Social predicting an economic slowdown if Jay Powell doesn't act.
Yeah, his exact words, there can be a slowing of the economy unless Mr. Too Late, a major loser, as Joe said, lowers interest rates, talking about preemptive cuts in interest rates being called for by many. So once again, putting a question mark around the independence of the Federal Reserve after the chair of the NEC, Kevin Hassett, on Friday suggested the administration is looking into whether it has the option to fire the chairman. Of course, that is a very murky legal question.
Remember a whole other life when we were talking to Scott Besson about a shadow Fed chair. That conversation is being reanimated today in Washington, D.C., and Wall Street isn't having any of it. This is pretty tough. We're looking at some of the worst numbers of the day right now with the major indexes down almost 3%, even more for the NASDAQ here.
Yeah, and interesting to watch the yield curve as well as at the low end, the Fed-sensitive end, the two-year yield's going lower. At the long end, yields are going higher, so a lot of movement in the curve as well. And of course, this all comes with major questions still around the president's tariff policies and what influence that will have on the economy. And interesting for Bloomberg to break the news this afternoon that the president will meet today with the CEOs of some major retailers. Think Walmart, Home Depot, Lowe's.
Yeah, some of which as they're looking into this review for some 90 days here. Markets aren't terribly patient. We've got a lot to talk about. We'll have a live report from the White House. Tyler Kendall is there with the latest, and a really interesting day to be spending time with Congresswoman Nicole Malliotakis, the Republican from New York, will be here as well.
Yep, looking forward to that conversation. But before we get there, we begin, as always, with a check of these markets, and Charlie Pellet has a look from New York. Hey, Charlie.
Hi, thank you very much, and here's what's going on. The Dow, the S&P, NASDAQ, very much in the red right now. In fact, we are trading close to session lows on the S&P 500 index. Right to the numbers, we got fast-moving markets here with the S&P now down by 2.9%. On the S&P, that is a drop right now of 151 points, 51.31 where we stand. Dow Industrials down 1,079 points, a decline there of 2.8%. And NASDAQ now down 518, drop there of 3.2%. 10-year yield, 4.39%. The 2-year, 3.74%. Gold up $84 the ounce, 34.11, gain there of 2.5%. And West Texas Intermediate crude oil down 2.7%, 62.95 a barrel. Sources tell Bloomberg Air India is looking to take Boeing planes rejected by Chinese carriers, joining the ranks of Asian airlines vying to benefit from the trade war between Washington and Beijing. Boeing shares down now by 2.8%. Marathon Monday in Boston. John Korir of Kenya joins his brother Wesley as a Boston Marathon champion, finishing the course in 2 hours, 4 minutes, 44 seconds. Sharon Lokedi of Kenya won the marathon in record course time. Again, recapping here, U.S. stocks lower across the board. The Dow, the S&P, NASDAQ deeply in the red. S&P down now by 3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. With a look at how markets are digesting the latest salvo from President Trump when it comes to the chair of the Fed, Jerome Powell, the pressure he is piling on him not going anywhere, in fact, amplifying it once again today on Truth Social. Of course, it's not unusual to see the president weighing in on Fed policy, or this chairman in particular. You can see examples of that going back as far as his first administration in 2018, but maybe a bit remarkable today, Joe, to see him directly suggesting there could be a slowdown in the U.S. economy if the chair doesn't do as he wants and cut rates, perhaps preemptively.
In all caps, there can be a slowing, he says, of the economy unless Mr. Too Late, a major loser, lowers interest rates. Now, as Charlie Pellet mentioned, it's Marathon Monday, Patriots Day in Boston. At the White House, it's Easter egg roll day. Easter Monday, we'll call it, and that is where we start right now with Bloomberg's Tyler Kendall. She's on the north lawn of the White House. Tyler, I know the president was with the Easter Bunny a little while ago. He did make some remarks. Has he talked about these markets at all?
Yeah, Joe, at the moment, we've yet to get any indication on exactly if the White House is watching the markets in reaction to his most recent criticism of Jerome Powell, going as far as to say that the U.S. economy could slow if the Fed doesn't move to cut rates and quickly. It does appear, as we see growth forecasts starting to be decline across the globe, that this White House could be potentially preparing to shift some of the blame for the impacts of his tariff policies onto the Federal Reserve. Now, Joe, of course, the biggest question question here is whether or not this White House actually has the legal authority to remove Powell. And if you ask the Fed chair himself, he would say that he doesn't think he can be fired and that he wouldn't step aside if he was asked to do so. In theory, Powell is supposed to be shielded from being fired without cause by the Federal Reserve Act of 1913, but there are some big questions, as you know, here in Washington about the future of the independent federal regulators. We're watching very closely one case that could be decided by the Supreme Court within days that has to do with another independent regulator when it comes to the National Labor Relations Board. And this administration asking the courts to overturn legal precedent known as Humphrey's executor, which would shield independent agencies from political firings. We'll have to see what ends up happening with that, because it is considered to be a test case, as President Trump doesn't appear to be letting up the pressure as he ties this very closely to his tariff policies. And as the tariff negotiations get underway, you mentioned this at the top of the hour, but Bloomberg News reporting there's going to be a key meeting here at the White House later on with some big retailers. That includes Home Depot, Walmart, Lowe's, and Target, as the private sector also tries to get into these talks as the White House attempts to cut some deals when it comes to his tariff policies.
All right, Bloomberg's Tyler Kendall live at the White House. Thank you so much. And the stock of some of those very retailers that Tyler was mentioning under pressure today, as we're seeing a wider sell-off in the equity markets. We're now down more than 3 full percentage points on both the S&P 500 and the NASDAQ 100. And on that note, we turn to Gina Martin-Adams, Bloomberg Intelligence Chief Equity Strategist, joining us from New York. Gina, when you look at the renewed selling pressure once again today, is it so much that markets are actively reacting to the news or the suggestions about the future of the Fed Chair Jerome Powell, or they just don't see another compelling reason to be buying instead of selling?
Yeah, I think that those are two very valid reasons that are coming up all day today. But the third, I'd say, is earnings season. So far, 65% of S&P 500 companies that have reported much lower sales than expected by the analyst community. And that was in the first quarter, before we had Liberation Day really rock S&P 500 companies' world. So I do think that kind of earnings are playing a role as well. The dollar is also playing a role. The fact that the dollar is falling when the S&P 500 is falling is a very rare thing, particularly when the S&P is this weak. To have the dollar also weakening is creating a lot of concern in the form of financial markets concern that broadly investors are losing a little bit of faith in the system itself. So there's quite a few things, frankly, that investors are having to contend with. I think the other thing that I would note is we're coming off of excessive overconfidence. When we came into this year, markets were pricing for greater than 20% earnings growth emerging. Now we're looking at closer to 0 as the potential run rate, if not a contraction in earnings, depending upon how this 90-day reprieve plays out. So the markets have just been really sideswiped and certainly taken by surprise so far this year.
So where's the safe haven right now, Gina? I mean, is it gold, Bitcoin? Is that it?
Yeah, I think that international equities also have already priced a significant amount of weakness. They didn't come into this year as overconfident as U.S. equities did. International equities priced at extreme discounts relative to U.S. equities, and currencies there generally rallying would suggest a very alternative. We did a note this morning talking about EM equities as a potential safe haven, where even the downside risk in China is somewhat limited by even a U.S. recession in comparison to the downside risk to the U.S. market. Part of that is where stocks were priced in each market coming into this year. Very similarly, you see EM countries across the world less correlated to the U.S. markets than they had been in the past. So low beta markets tend to offer some degree of safe haven. Certainly consumer staples and utilities stocks, and as the sectors that behave more defensively, low beta sectors tend to perform a little bit better in sell-offs like this. There are relative safe havens, but unfortunately most equities are going to struggle in a climate like this one.
Gina, it's great to have you. Gina Martin-Adams, Bloomberg Intelligence Chief Equity Strategist. As we follow stocks lower, we'll have an update from Charlie Pellet in just a little bit more than 10 minutes from right now. But we are reaching to lows for the day here. 3% plus losses for the S&P 500 and the NASDAQ right now. I'm Joe Matthew in Washington alongside Kaylee Lines. This is Balance of Power. The news coming out of Washington has so much to do with what's happening right now on Wall Street, and it's where we start our conversation with Congresswoman Nicole Malliotakis, the Republican from New York's 11th District, with us live from World Headquarters in New York. And Congresswoman, we want to welcome you back, as always, to Bloomberg TV and radio. Do you worry about the intersection in this case of Washington and Wall Street? The words of the president, or at least as he posted on Truth Social, appear to be pulling us lower here, referring to the Fed chair as a major loser, even though he did appoint him initially. This is the impact of the rhetoric in American politics now, no?
Look, I think that we need to be focused on governing with a confident, steady hand here. I think the most important thing that we can be doing is making sure that we pass this very important tax package, that we prevent an expiration of the existing 2017 Tax Cut and Jobs Act. That in itself, I think, is something that can send a very strong message that we get back to Washington next week and we see pieces of this bills being furnished by the individual committees. I think there's a question right now around the world whether we can get the job done. I believe that we can and we must, or else it's a $4 trillion tax hike, and you'll see a lot of the provisions that were so important to the American economy expire, right? We have so many things at stake here. You have interest deductibility, R&D, expensing, you have bonus depreciation, you have the corporate tax rate that would go from 21% to 35% if this were to expire. And of course, the other provisions that lifted millions of Americans out of poverty, that created 7 million jobs. There's a lot here, and we need to make sure that we not only pass it, but that we expand it in a way that we add more pro-growth policies so we can see the economy really prosper, and repatriation of manufacturing is another big component of this as well that I've been working on.
Well, and we know, Congresswoman, that any expansion of tax cuts will require offsets based off of the kind of framework that the House is working with here. So it becomes a question of the spending cuts. I'm sure you're well aware that the House Energy and Commerce Committee is going to begin marking up its portion of this massive reconciliation bill, and that will be the Medicaid question. Have you seen a list of proposals or any kind of draft around what exactly will be put forward when it comes to Medicaid, knowing you have looked for assurances on that front? Do you expect you'll see one before the markup?
Well, what we have seen is the menu of options, right? And we're talking about the entire energy and healthcare portfolio. So it's not just Medicaid. It obviously deals with regulations. It deals with broadband spectrum sales. It deals with other components, emission vehicles, things like that, that could be offsets. With the Medicaid piece, we've made it very clear to the Speaker, to the Chairman of this committee, as well as to the President of the United States, that there is a group of us that will not support any package that would diminish, meaning taking individuals who are legally eligible for Medicaid off the rolls. If they are eligible, they need to be able to keep their eligibility. Now, aside from that, specifically, we're talking about our senior citizens, our people with disabilities, children with developmental disabilities, pregnant women. These are people that we are really laser focused on. Yes, we can implement work requirements on people that are able-bodied. They should be contributing in this economy and working. That would remove them off of Medicaid and put them on most likely private insurance, saving the government money as well. And of course, the fraud, getting rid of it, which accounts for roughly $50 billion a year in Medicaid alone. That's $500 billion over 10 years. So when you're looking for a savings of roughly $880 billion over 10 years, that's a big chunk of it right there that we're going to save. Yeah. And so we've just made very clear that in terms of reimbursement rates for our states, New York, for example, 50% federal reimbursement, we will not allow that to be lowered. So that was one thing that we pushed back on, as well as per capita caps on traditional Medicaid. That's something that we've also said is a red line for us. And we've received positive feedback from the Speaker and a commitment that they're not going to touch those things.
That's really interesting. We saw your letter to House leadership on this last week, Congresswoman. There's been a lot of talk about a millionaire's tax, and I wonder if that's something you might warm up to if it means not rating Medicaid.
Well, it's certainly on the table. It's being considered. We have to make sure that we have a tax structure that is fair. Obviously, the president has a lot of priorities, which we share. We want to see working class, middle class communities get some relief. We want to see the SALT cap increase, the deduction increase for people that I represent here in New York who are struggling with high property taxes and income taxes as well. We want to make sure that we're protecting our seniors who are on Social Security and that they're not having to pay taxes on their small Social Security checks. And so if we want to do these things, then we need to find the money to offset it. And so we're looking at every option on the table. I think that, we're having serious discussions about where this money is going to come from. And that's one of the options that is currently out there. But we also want to make sure that we're preserving the other various aspects of the TCJA that were so critical for our economy, that created jobs, allowed companies to expand and invest, and repatriate manufacturers. Another big piece of this that we're very much focused on. How do we give a lower rate for new facilities that are built here or expanded here to create and manufacture, so we can repatriate some of this stuff that's happening overseas, in particular pharmaceuticals, that we're relying on communist China for such a huge portion of our medication here in the United States. That has to end. If we've learned anything from COVID, must be a priority in this package.
Congresswoman, as you talk about the various options here, is one of the options being considered taxing carried interest as ordinary income? Is that something you would support if it's on the table?
Well, that is one of the proposals that the White House has put forward. They do want to address the carried interest. This is something that we've heard a lot from people in opposition. Obviously, the real estate industry, venture capitalists, very concerned about the carried interest proposal. It's on the table, but we are still evaluating this and other options. The other thing that has been on the table, which we met with many real estate industry individuals here in New York today, actually was about the sea salt, corporate salt, for property taxes, for income taxes here in the state. This one in particular is very concerning because the real estate industry cannot bear to have the sea salt removed, basically, or imposed on the property portion. So if they start seeing that they can't deduct this business expense from their federal taxes, it will put really a big burden on these real estate companies, these buildings, and we'll see maybe foreclosures, we'll see property values decline, which will then reduce the rolls that our local government receives on property taxes. So I think that's a big one that I've been pushing back on just as a member from New York City. It could be very detrimental to our city, but it affects municipalities all across the country, particularly those states that don't have an income tax. States like Texas and Florida rely a lot on real estate taxes.
Congresswoman, we only have a minute left. I'm curious, did you pay a congestion tax to get to our studio earlier today? I thought it was coming down on April 20th per order the Transportation Department.
Well, unfortunately, our governor and the MTA want to continue to violate federal law, and so I was forced to pay that fee, but I hope not for long. And I was very happy to hear President Trump and Secretary Duffy today say that they're giving them just one more month, or else they're going to look at other measures to try to penalize the state and the MTA for not complying with federal law. The president was right to rescind that approval from Joe Biden. That was basically a rubber stamp without the environmental impact statement required under NEPA. That is why I am among those who have sued the MTA and the state. We hope that they comply because it's an unfair cash grab on the people I represent.
All right, we'll leave it there. Congresswoman, thank you, as always, for your time. That is Republican Congresswoman Nicole Malliotakis of New York, joining us from our global headquarters in New York. Meantime, we'll continue the conversation here in Washington. Our political panel, Rick Davis and Jeannie Shanzano, are just ahead here on a sell-off day on Wall Street on Bloomberg TV and radio.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word that the Federal Trade Commission is suing Uber, alleging deceptive billing and cancellation practices. Uber shares down today by 4.2%. Developing story headlines right now on the Bloomberg. Stocks lower across the board with the Dow, the S&P, and NASDAQ all tumbling as President Trump continues to verbally attack Fed Chair Jay Powell. The S&P now down 162 points, down 3.1%. Just about the lows of the day again on the S&P. The Dow right now down 1140. That is a decline of 2.9%. NASDAQ, the composite index, down 543, down 3.3%. 10-year at 4.39%, with the 2-year currently yielding 3.73%. Gold up $85 the ounce, up 2.5%, 34.11. We are looking at a record on the precious metal, while West Texas Intermediate crude down now by 2.4%, 63.12 a barrel on WTI. NVIDIA shares down now by 6%. NVIDIA trading near its lowest valuation of the AI era, but a growing list of perils has investors cautious about taking advantage of today's dip. Homeland Security Secretary Kristi Noem's purse that contained $3,000 in cash was stolen while she was dining at a popular Washington, D.C. restaurant over the weekend. An incident now under investigation by the Secret Service, and according to sources, that restaurant, by the way, the Capitol Burger. The Dow, the S&P, NASDAQ all in the red. S&P down by 3%. Marathon Monday in Boston. John Courier of Kennedy joining his brother Wesley as a Boston Marathon champion. And Sharon Lokedi of Kenya has won the marathon for the women. Balance of Power continues right now. And back we go to Washington once again. Your hosts, Joe Matthew and Kaylee Lyons.
Charlie Pellet, thank you so much. Thanks for being with us here on the Monday edition of Balance of Power as we spin a couple of plates today. One of them, of course, being Wall Street. The other being the Pentagon, said to be in disarray, and a series of reports, two separate hit pieces over the weekend about Pete Hegseth that prompted the Secretary of Defense to come out this morning at the Easter egg roll, Kaylee, of all places, to try to tamp this down, and in his case, deny reports that we're reading now of another signal chat on his personal phone that distributed information about the attack in Yemen. That was part of the other signal chat that, of course, brought so much controversy to the secretary, as well as an op-ed from a former Defense Department official, John Elliott, who left last week, calling it an agency in disarray, Kaylee, and one that he said would have more bombshells dropping later this week.
Yeah, suggesting he didn't think that Hegseth was going to be surviving in this job. And yet the indication, at least every indication at this point from the White House, is that they're standing behind Hegseth as he showed up to the White House Easter egg roll.
He sure did. That's for sure. And not the most traditional setting for a Secretary of Defense under fire. Here's Pete Hegseth from earlier.
This is what the media does. They take anonymous sources from disgruntled former employees, and then they try to slash and burn people and ruin their reputations. Not going to work with me, because we're changing the Defense Department, putting the Pentagon back in the hands of warfighters, and anonymous smears from disgruntled former employees on old news doesn't matter.
So we want to get into this now with our political panel, as there's new reporting just out from NPR saying that the White House has begun the process of looking for a new defense secretary, even though the president did defend Pete Hegseth literally just hours ago when speaking to reporters at the White House. NPR citing here an official familiar with this. So let's get the reaction now from Rick Davis, partner of Stone Court Capital and Republican strategist, alongside our Democratic analyst, Jeannie Shanzano, senior democracy fellow at the Center for the Study of the Presidency and Congress. Rick, obviously this just broke from NPR. Bloomberg has not had a chance to confirm this yet, but would you be surprised if Pete Hegseth was the first head to indeed roll over this?
Well, certainly the first cabinet head. I mean, if you have an administration policy of gutting these agencies, in fact, actually even closing down things like the Department of Education and USAID, then you shouldn't feel very secure in your job inside this administration. And I'm not suggesting either one is right or wrong, but the idea that we're not going to make any changes between now and the end of this term is just not simply realistic. And so I wouldn't be surprised. He had a hard time getting the confirmation vote he wanted to begin with. And a lot of skeptics as to whether or not he'd be able to handle this very, very difficult and important task. And it sounds like, at least the reporting is, that the White House seems to agree with that.
Pretty remarkable here, Jeannie. I don't know if you believe this. That would result in some sort of, I won't say admission of guilt, but an acknowledgement of controversy for a president who has wanted to stand by his man. This would not be on brand for Trump. Then again, we had a swinging door in the first administration. Could Pete Hegseth survive the week?
It's all up to President Trump, as we know. Can he? He could. Should he? Absolutely not. This is somebody who has put the lives of our military men and women at risk with reckless behavior that would get anybody who works for him court-martialed and fired. And Donald Trump knows this. Whether he chooses to acknowledge it and to go ahead and replace him is obviously still a question, and I appreciate NPR's reporting this now. But the reality is that this is a cabinet secretary who is leading one of the most important departments in our government, and it has been chaos. And these are not liberals and Democrats who are calling him out. This is a MAGA on MAGA war. 3 of the people who left last week worked with Pete Hegseth. So this is something that Donald Trump is hearing from all sides. He was inexperienced. He wasn't up to this job. We all knew that. He did it anyways, and it has just been 80, 90 days. And already he has had multiple challenges. And so he should go, absolutely.
We'll add the voice of Republican Congressman Don Bacon of Nebraska, who tells Politico, this is a direct quote, if it's true he had another chat with his family about the missions against the Houthis, it's totally unacceptable, going on to say, I'm not in the White House and I'm not going to tell the White House how to manage it, but I find it unacceptable and I wouldn't tolerate it if I was in charge. The fact remaining, Jeannie, that it is President Trump who is in charge for now, and I think we all know well how much he does not like to kind of bow to media narratives when they aren't necessarily in the favor of his administration. Given all of the coverage of this, do you actually think it makes Trump more likely to double down on his defense of Hegseth, even given everything that you just said?
Yeah, I mean, he is inclined to defend these kinds of things just because he doesn't want to acknowledge that he may have put somebody in a position incapable of running a department this big. But the reality is that Donald Trump has surrounded himself and pushed on the American public and the world, quite frankly, one bit of chaos after another. We're seeing it in the financial markets today in the last few weeks. We're seeing it in the Defense Department. We're seeing it in the State Department. We're seeing it in the Education Department. There's only so much that the American public is going to take, because the reality is people liked Donald Trump's policies. His execution of those policies has been, to this point, very problematic, if not disastrous and messy. And so he's going to need to clean this up. And maybe he starts with Pete Hegseth. But again, we're talking about the lives of American pilots and soldiers. And Don Bacon is right. They should take action on this. It is completely reckless and unacceptable for him as a cabinet secretary to engage in this kind of chat with his wife and his brother.
Well, if NPR is correct here, Rick, we don't have to go back any further than December to have a sense of who else Donald Trump might be considering. You remember when this was confirmation time and Pete Hegseth was said to be on the rocks, Donald Trump was looking around. Remember the phone call he made was to the governor of Florida, Ron DeSantis. I know a lot has changed in a couple of months, but could that name emerge again?
You know, it would be interesting to see what the next cycle would bring, because remember, now you have all these alliances, all these partnerships, all these wars going on within the White House, within MAGA, for turf, for power, for influence. We've seen it play out very graphically on the trade war. But I think that would probably bust this thing wide open, and we'd see some really active lobbying by, probably the DeSantis team. Remember, a lot of those guys are still very much involved in the administration, in the federal administration. But at the end of the day, by the end of the week, Trump will probably be claiming he really didn't know Hegseth that well. That's his sort of, typical refrain. I only saw him on TV a few times, seemed like a good-looking guy. There's no investment by Donald Trump in anybody other than Donald Trump. And honestly, that's a healthy thing for being president of the United States, but it's not so healthy for being a long-term member of a cabinet.
Well, let's talk about another member of the cabinet that is pushing back on a media narrative that emerged over the weekend, and that's the Secretary of State, Marco Rubio. Rick, I'm sure you saw, he says that a New York Times report around a reorganization, if you will, and specifically a reduction, reshaping of the State Department is fake news. Bloomberg had reported this as well, that there is a draft executive order that is circulating that essentially would eliminate dozens of positions in a number of different departments, including by and large pulling out of Africa in departments that are dealing with climate, refugees, and democracy. And whether or not the specific details of the report are fake news, Rick, would you be surprised if we find ourselves with an executive order that does dramatically reduce the footprint of the Department of State?
Yeah, I wouldn't be surprised. There's been enough conversation around this that I know the Secretary has been denial of exactly what is in the hopper to change the State Department, but even he is working on a reorganization of it. And so the question is, what comes out of it? As you point out, the talk about closing embassies in sub-Saharan Africa, and reserving only two things is for a priority for Africa: basically the extraction of critical minerals and going after counter-terrorist subjects. So if that's all it is, then it's basically a huge retreat from a critically important part of the world, and that's just the beginning. The idea that we would reorganize the State Department into just 4 regions of the world and operate out of those desks somehow diminishes the soft power that the United States has done so well to promote over the last 50 years.
Kayleigh, just want to mention that we heard from the press secretary. You just put this in front of us here on Twitter, on X, this NPR story, as we were just discussing. NPR reporting that President Trump is looking for alternatives to Pete Hegseth, looking for a new defense secretary. This NPR story is total fake news, Caroline Levitt writes, based on one anonymous source who clearly has no idea what they're talking about. As the president said this morning, he stands strongly behind the SecDef, tagged him on that. We have to also acknowledge the fact that 4 senior Defense Department officials were shown the door at the end of last week, alleged to have leaked news to the media.
Yeah, of course, they pushed back, saying that they were not informed of any such investigation. And that is the kind of disgruntled employee narrative that you're hearing Defense Secretary Hegseth, as well as President Trump himself, pushing, that you have to consider the source where this criticism is coming from, at least in the case of Elliott.
That's right. People, in many cases, he was very close with. Big thanks to our panel. Of course, as always, Rick Davis and Jeannie Shanzano helping us understand this as the headlines fly. Of course, the big headline for Bloomberg today so far, Kayleigh, has been the president calling the Fed chair a major loser, suggesting an economic slowdown in the absence of Fed rate cuts in a market that is deep in the red today.
Yeah, we're right around the lows of the session, still greater than 3 percentage point losses on the S&P 500 and NASDAQ 100, while we're seeing a climb upward in long-end yields. The 10-year right now up 8 basis points to 440. And we'll have much more ahead here on Bloomberg TV and radio.
7:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story, and the White House is now denying an earlier NPR report saying the administration has begun the process of looking for a new Secretary of Defense. The White House spokesperson says the president is standing strongly behind Pete Hegseth. Stay with Bloomberg and Balance of Power for the latest developments on this story. The Dow, the S&P, and NASDAQ very much in the red. Stocks are tumbling as President Trump continues to verbally attack Jay Powell, calling on the Fed chair to cut rates as signs mount that the president's trade war is pushing the economy toward recession. Right now, very close to session lows on the S&P. That index down 165 points, a decline of 3.1%. The Dow down 1162 now. That's a decline of 3%, while the NASDAQ Composite Index is down 557, a drop there of 3.4%. 10-year, 4.39%, with the 2-year currently yielding 3.73%. Gold up $93 the ounce to $34.20, up 2.8%. And West Texas Intermediate crude just about at $63 a barrel, down by 2.5%. Chipotle Mexican Grill is taking its menu to Mexico. The burrito chain plans to start opening outposts in Mexico next year. First location should be open by early 2026. Not the first time an American chain has tried to do this in Mexico. Competitor Taco Bell learned that things didn't work out after the taco chain flopped in Mexico a couple of years back. Yum brand shares parent Taco Bell down 2.6%. Chipotle Mexican Grill down now by 4.9%. In Boston, Marathon Monday, Sharon Lokedi broke the Boston Marathon course record. Fellow Kenyan John Courier joined his brother as a race champion as the city celebrates the 250th anniversary of the start of the Revolutionary War. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. With a look at the markets on this Patriot Day, also, of course, White House Easter egg roll day on this day after the holiday. And it was interesting to see not only the president doing the usual, interacting with the Easter Bunny, the First Lady, of course, there as well. There was book reading, there was some coloring, but there was also some talking with reporters for President Trump, who answered a number of questions, of course, in part defending his defense secretary, Pete Hegseth, who we were just discussing, but also was fielding questions, Joe, about efforts toward ending the war in Ukraine. When he was asked specifically by a reporter if he thought a deal between Russia and Ukraine could be made this week, he says he thinks there's a good chance.
Pretty remarkable stuff. We were talking about a minerals deal potentially being signed this week. You were talking about the whole shebang now, and it follows reporting over the weekend, some reporting from Bloomberg, in fact, that there might be some particulars here in a deal that Ukraine would have trouble with, including codifying Crimea as the Russian homeland. Joining us to talk about this and a lot of other stories that are impacting today with a new look potentially at the State Department coming from this administration. Michael Allen, Managing Director, Beacon Global Strategies, and of course, former Special Assistant to President George W. Bush in the national security space. It's always great to have you, Michael. Welcome. Thanks for having me. To see a deal signed this week would be pretty remarkable. This, of course, is the war that the president said that he would bring to an end in his first day. This is day 90. That would mean he gets it done on the first 100 days. Is it possible?
Well, it's been pending out here for a while. Ukraine has said they will accept a 30-day ceasefire. The Russians, of course, except for the Easter Day ceasefire, have not been willing to go that far. But if the reporting is true, which is that the White House is open to describing Crimea as Russian, and maybe there are other inducements in there, perhaps as it pertains to sanctions, maybe as it pertains to no, never, Ukraine cannot get in NATO. I think it's conceivable that they could get there. But to me, remember, there's a long spectrum between ceasefire and peace agreement. And so all these issues are going to have to be discussed again.
Well, and I wonder if resolution to these issues doesn't happen this week, if you expect the administration will stay on the table, because let's remind ourselves of the words of the Secretary of State, Marco Rubio, just on Friday.
Now we've reached a point where we have other things we have to focus on. We're prepared to be engaged in this as long as it takes, but not indefinitely, not without progress. If this is not possible, we're going to need to move on. I think the president feels strongly that we've dedicated we've done more in 80 days than Biden ever did to bring this war to an end.
Not indefinitely. So if it's not this week, is it not ever?
It feels like he's leaving himself some room to continue after it, but I think they badly need some sort of points on the board this week, and I think they're probably doubling down to get to the 30-day ceasefire so that Trump can point to some progress in this. Otherwise, I think what we're going to see is just continued bloodshed on either side. I have my own doubts, by the way, about whether the Russians are really going to adhere to a ceasefire. I think it'll be sloppy, but we're just going to have to see what they come up with.
Well, it's quite an evolution to go from I can end this war in the first day to having still really no clear path on day 90. Did President Trump misread Vladimir Putin?
Well, I think there's also got to be some sort of recognition on the White House side that some of these might be insoluble issues. After all, Putin wants to control Ukraine, not just its territory, but to dominate its foreign and national security policy. This is something, of course, that the Ukrainians could never agree to. The Ukrainians cannot, by the way, either agree to a formal recognition of some of their territories, even those that the Russians don't actually control today, as formally part of Russia under some fiction that there are Russian speakers there. So I think there are a lot of fundamental issues that they're going to take months to get to, if ever.
Bloomberg is reporting today, Michael, that the U.S. is likely to hold talks in London on Wednesday with not just Ukrainian officials, but European officials as well, from the UK, France, and Germany. What role should we expect Europe is going to play as this moves forward?
Well, they have felt locked out of the process so far, so I'm glad that Secretary Rubio over the last few days has begun to think of a role for them. I think for those of us that kind of want to see Ukraine's interests more represented, it's good to have these European nations involved. After all, Trump is saying this is your security problem in the long term, so they need to have some sort of role. They need to be there on the takeoff if Trump wants them to be there on the landing. So let's figure out a way to get them involved, get them motivated, because they're the ones that are going to have to supply a lot of this security assurance.
Iran talks will continue as long as there's another meeting. Is this progress?
I don't think so.
No?
I think there's a lot of delay inherent, and I think what really has happened over the last couple of weeks is that Steve Witkoff went in. I think he was agreeable. I think some of the things that the United States is willing to do was exaggerated. People came back last week. I think they stiffened some spines, and the United States is back to a tougher Iran policy, which is we don't want enrichment to continue, and we're not going to just give up on inspections of weaponization. We talked about this last week. Yeah. You have to have anytime, anywhere inspections by the International Watchdog Agency, and that has got to be part and parcel of anything going forward.
So if ultimately a deal is to be reached, how akin will it be to the original deal from 2015 that President Trump walked away from?
That's what makes this so hard for the Trump team. It would seemingly be easier to sign up to something that just looks like what Barack Obama did and maybe add a few years. But that will look terrible because President Trump called that the worst deal ever negotiated in the history of the world. And so they're going to have to come up with something that's stronger. And when the hawks get involved, like Marco Rubio, like Mike Waltz, they're saying we shouldn't have any enrichment whatsoever, and we ought to be able to have some assurances that you're not thereby trying to weaponize resultant fissile material to fashion it into a bomb. Those are big things we're asking for. They're the right things, but that's something that Iran's not going to be able to accept anytime soon. So we've got to let maximum pressure play out over time. By the way, I don't know why we're in such a rush. I think there is some time to let Iran bake in sort of the sanctions oven for a while.
Interesting. We're having this conversation amid another scandal at the Pentagon. The White House is calling it fake news now by NPR that the president is looking for a new defense secretary. But it's no wonder why we're having reports like this today. Another signal chat is being reported by the New York Times in which Pete Hegseth shared these Yemeni attack plans with his wife and some other folks in his personal life. Also follows the departure of 4 officials at the Pentagon last week, fired for alleged media leaks. One of them is John Elliott, although I believe he also wanted to leave the Pentagon here. You can frame that as you want. Left the department last week with an op-ed over the weekend. Pentagon is in disarray under Hegseth's leadership. Is he right?
He needs, I think Hegseth needs to come out and actually demonstrate that he's in control of the department. I think one way to do that might be to come out and actually brief the Pentagon press corps. Talk about the things that he's trying to do. He's often talking about increasing the lethality of the force. There are big questions about DOGE. There are big questions about where the department is on these foreign policy issues of the day. I think that would be the best way for Hegseth to try and demonstrate that he has control, that he has strength, that he has some strong policy views, and that he's doing all these things in service of the president. I think to just totally dismiss everything as a hoax is sort of beyond the point. He ought to come out and talk about, hey, here's what I'm trying to do, and sign up to that.
But even if he is trying to do all of those things, is it not disqualifying to share the whereabouts of American airmen, the plans for F-18 flights in Yemen with your wife, with your brother, with your personal attorney, people who are not employed by the Defense Department, not entitled to receive that kind of information?
I think so. I mean, there's no real way to say this other than maybe he should just say, you know what, I made a mistake. It wasn't classified, but I probably shouldn't have been sending it, and move on. Instead, I think there's a lot of attacks. There's impugning of the motives of the people that are reporting this. Yeah. I think he'd be safer just to sort of say, hey, you know what, some mistakes were made. There's an IG's investigation going into this, but here's what I'm trying to do is SecDef, A, B, and C.
Well, you know, of course, he's talking about anonymous leaks here. We saw 4 people shown the door. The person I mentioned, John Elliott, says that there are more bombshells to come, likely in short order, even bigger this week. Does the Pentagon have a leak problem?
It sounds like something is going on for sure, where there are disaffected people across the department. I'm sure there's been a lot of China broken as the new team has taken over. Yeah. So maybe what he's referring to is that maybe some uniformed military are going to resign or be fired. Hard to say for sure, but it feels quite rocky over there. Wow.
Well, and I'm wondering about the leaking coming out of the State Department as well, as the Secretary Marco Rubio pushes back also as fake news, reporting that there's this kind of draft executive order that is circulating among diplomats that shows how dramatically the administration is considering reshaping the Defense Department. And I wonder, Michael, your specific thoughts on the idea that it could include the closing of a vast number of embassies in Africa. Does that not just cede to China?
Well, I was going to say the same thing. That is the battleground where we are competing with China for influence, the global south. I don't think it's a good idea for us to be shutting down diplomatic offices in Africa. Maybe there's something to be done in Western Europe and Canada, some consulates here and there, where the power has shifted to Asia, or we need to get into Africa. So I don't want to begrudge them. I'm glad they're taking a big strategic look at the State Department. God knows it needs some reform, but I wondered, like you did, about whether Africa was the place where we should be uprooting consulates.
You're a communications specialist as well as a national security expert, which is why we bring you on the program here. If you were trying to clean up a mess here with the Secretary of Defense, a situation like we have today, 2 hit pieces over the weekend, the Signal story, you suggested maybe briefing the press corps at the Pentagon. Would that be as opposed to standing him on the South Lawn at the White House with a big horn playing in the background, cartoon characters, the Easter Bunny jumping around to manage these questions today?
Well, you're making it easy. Yes, I think it would be better.
What do you make of the optics here?
There's so much that the SecDef is in charge of. There are so many things to be talking about, like the reconstitution of the force, how he wants to shift things to Asia and away from Europe. I think he's mostly on the defensive about just showing up for the Ukraine contact group via civets instead of being there in person. He should start to explain his own actions, and I think people will understand that. And that, by the way, is a way for him to try to get some support from what he's doing. He needs support in Congress in particular, so he should start explaining what the policy is, and I think people might come along.
All right, Michael Allen, always good to have you here in our Washington, D.C. studio. He's Managing Director of Beacon Global Strategies, also former Special Assistant to President George W. Bush in the national security space. We appreciate you joining us here, as always, on Bloomberg TV and radio, as we keep an eye on geopolitics, on domestic politics, but also how all of that is feeding through to financial markets. As I've said this a few times, I feel, this hour, but we are at fresh session lows, down 3.3% on the S&P 500, more than 3.5% 2.5% on the NASDAQ 100, as the market is also paying attention to the words of the president when it comes to the chair of the Federal Reserve, or who he's now calling Mr. Too Late, as he pushes for a preemptive interest rate cut.
A major loser, he called the Fed chair, who he in fact appointed. That was a few years back, but indeed he was a Trump appointee. Questions about maybe how long he'll be on the job here, although Jay Powell says he's going nowhere. One thing that is rising today, the VIX back above 35. And we'll meet you back here after 5 p.m. Eastern Time for the late edition of Balance of Power. Kaylee, think of what could happen between now and then. This is Bloomberg.